and insightful event. And ladies and gentlemen, we're celebrating 15 years at etnow. So a very good evening to all of you, our esteemed guests, and good evening, Vikram.
Very, very good evening. Very excited. 15 years of etnow. It's a momentous occasion, no doubt. And Avan has been here all these 15 years, haven't you?
I feel like an absolute relic. There's so many of us here who have been a part of etnow for so many years. And yes, indeed, this is a wonderful milestone.
It is something that we are looking forward to celebrate through a series of dialogues that are going to unfold this evening. We are looking forward to you all settling down. RBI Governor Shaktikanta Das with us, our chief guest for the day. It's been absolutely thrilling, really, to be a part of this journey here at etnow. It's an incredible milestone that we have been able to achieve over the last 15 years. And now we've played this pivotal role, Avan, a pivotal role in ensuring that financial knowledge, that opportunities to grow, to reach every corner of the country is something that etnow has been able to build on over these last 15 years. And we believe in staying ahead of the curve, to spot the trends, to find out where the stock market is moving and track that universe very, very closely. Through our comprehensive coverage, through our astute programming, we've been able to do all of this. We've empowered millions of our viewers to make informed financial decisions, haven't we?
Absolutely, and a lot of those guests who help us make those informed financial decisions have chosen to grace us with their presence today. So we thank you all, and we're very excited to have you here today. In fact, as you all know, that etnow is India's premier business and financial news channel. We are not just committed to trend spotting and demystifying financial concepts, but we've also been very instrumental in contributing to the nationwide goal of economic prosperity. And that aligns with our mission to help our viewers. And that, of course, is our tagline, Rise with India.
That's exactly what we seem to have done over these last 15 years, because we came in at a momentous time as well. Just after the financial crisis, 2009, the world was just about reviving, and what a period we had. And we've taken this grand commemorative occasion today, an opportunity to create etnow Leadership Dialogues, like we are calling it. It's an enlightening platform that seeks to congregate industry leaders and stalwarts. Some of them are right here in this audience, and we bring you the most thought-provoking discussions, insights from the world of business and finance.
And what an exciting time it is for us, Vikram. We've surpassed all the predictions when it comes to the progressive growth that we've witnessed in the country in the last decade. Yes, we have had our fair share of socio-political upheavals, but we've thrived as a nation, we've thrived as an economy to really amass international attention. And at this halfway mark to the next decade, it is time to set our sights on India at 2030. And that is the theme of our first ever edition of the etnow Leadership Dialogues. Ladies and gentlemen, that is the theme for today, and I request you all to take a look at the screen as we have a short video for you.
Welcome to the etnow Leadership Dialogues 2024, where we raise a toast to 15 years of empowering Indians. For over a decade and a half, etnow has been more than just a channel. We have been a beacon of hope, a guide through the complex maze of financial markets, and a storyteller of India's remarkable transformation.
भारत $5 ट्रिलियन की इकोनॉमी के लक्ष्य को प्राप्त करे.
From the heart of bustling metros to the serenity of the smallest towns, we have bridged the gap, bringing financial wisdom to every doorstep.
Nifty is at a record high, so it's a brand new print on the Nifty.
The Nifty traded into uncharted territory. We surpassed 9,400 with conviction.
Celebrating peak 50K for the Sensex.
Fresh new high as far as the index is concerned.
And through every peak, every stride, etnow has been there. Through groundbreaking journalism and insightful programming, we have fostered financial literacy, empowered investors, and sparked conversations that shape the economic landscape of our nation. We have connected you with the most influential voices, policymakers, market veterans, and visionary leaders. We have brought you the insights to make informed decisions and the inspiration to dream bigger. Today at the etnow Leadership Dialogues 2024, we gather to celebrate our shared journey and envision the future. Join us as we explore visionary pathways to grow. Hear from the esteemed RBI Governor Shaktikanta Das and engage with industry stalwarts who have driven India's financial and industrial success. etnow, empowering India for 15 years. Let's rise together.
Thank you for the applause. We are indeed all set to rise even further with India. The opportunities are huge, and we are here to delve into getting some of those insights about the path ahead. And here we are, as we are looking into the Leadership Dialogues 2024. We are going to engage with eminent industry leaders, policy makers, market veterans, all of them, many of them in attendance today. But before we do that, we would like to thank our sponsors.
Absolutely. The etnow Leadership Dialogues 2024 is presented by Capri Loans and co-presented by Jana Small Finance Bank. And we also request all of you in the audience, please do share your thoughts, your comments, your suggestions. We're active on social media, and we hope you are too. It's the hashtag etnow Leadership Dialogues. That's hashtag etnow Leadership Dialogues. And with that, Vikram, why don't we begin the formal proceedings?
The proceedings. To formally welcome this August gathering this evening, we would like to invite Executive Director and Group CEO Non-Publishing, The Times Group, Mr. N. Subramanian, to deliver the opening address. Mr. Subramanian, do join us.
Ladies and gentlemen, a big round of applause.
Respected RBI Governor Shri Shaktikanta Das, Mr. Dinesh Kara, Mr. Ashish Kumar Chauhan, Mr. Utpal Seth, Mr. Manish Chokani, Mr. Puneet Chatwal, Mr. Sunil D'Souza, colleagues and my dear friends. It's an absolute honor to welcome you all to the etnow Leadership Dialogues 2024 as we celebrate a remarkable milestone, the 15th anniversary of etnow. The occasion is not just a celebration of a channel, but a testament to the vision, dedication, and pursuit of excellence that the Times Network stands for. etnow stands on three pillars: integrity, innovation, and intelligence. And for over a decade and a half, etnow has been at the forefront of the country's economic narrative, providing unmatched insights, comprehensive coverage, and a platform for dialogues that help drive forward the task of nation building. In just over a decade, India has transformed from being part of the so-called fragile five to becoming the fifth largest economy of the world. The country is today the fastest growing major economy in the world, with a GDP of around $4 trillion. Over the past 15 years, following every episode of global crisis, India has always emerged stronger. Our country is today on the cusp of a new phase, an era characterized by remarkable growth, innovation, and opportunities. While we have our share of problems, we also have the capability and determination to resolve these problems. Our nation's economic and financial landscape is evolving rapidly, and the potential for future growth is tremendous. Let us look at the Indian stock markets. In the last 10 years, we have seen a remarkable rise in the number of retail investors. The number of demat accounts has surged from 2.3 crores to over 15 crores. Monthly SIP inflows have grown from 3,500 crores to over 21,000 crores. As a nation, we have every reason to believe that we will become a $10 trillion US economy, $10 trillion US dollar economy by the turn of this decade. Our Prime Minister Shri Narendra Modi ji's vision for a fully developed India emphasizes continued reforms to achieve this goal. These reforms include infrastructure development through significant investments in projects to boost connectivity and economic activity, Digital India to enhance efficiency and transparency, skill development to unleash the potential of our demographic dividend, Make in India to reduce dependency on imports and create more jobs, and green energy to drive long-term environmental sustainability in the country. We are extremely honored to have RBI Governor Shri Shaktikanta Das with us today. His tenure as RBI Governor has been marked by stability, implementation of critical reforms, and world-leading innovation in digital payments. He spearheaded the Central Bank Digital Currency Initiative and linked UPI with Singapore's PayNow. Recognizing his leadership and contributions to financial stability and innovations, Governor Das was awarded the Governor of the Year at the Global Central Banking Awards 2023. Also last week, the RBI received the Risk Manager of the Year award for improving risk culture and awareness. As the leading media company, Times Network has always taken pride in being more than just a chronicler of events. We are active participants in the narrative of India's growth. etnow has been a beacon of financial literacy and economic insight, empowering millions of Indians to take informed financial decisions and contributing to the broader goal of nationwide economic prosperity. Looking ahead, we are committed to not just tracking the country's growth, but also actively shaping the narrative. Throughout our in-depth analysis, expert interviews, and groundbreaking reports, we aim to provide our audience with a clear vision of the future. The essence of financial journalism lies in its ability to provide clarity despite the chaos of market fluctuations and economic trends. We will continue to highlight opportunities, dissect the challenges, and celebrate successes that shape India's journey of growing into a stronger nation economically and geopolitically. As we celebrate this significant milestone, let us reaffirm our utmost commitment towards excellence and our dedication towards driving India's growth story. The future is bright and the possibilities are endless. Together, let us rise to new heights and make the most of the opportunities that are before us. Thank you.
Thank you so much. Yes, absolutely. Mr. Subramanian, thank you so much. Those very astute words. And yes, the path is very clear for growth, isn't it, Avan? Just like Mr. Subramanian pointed out.
Absolutely. The path of growth looking very promising. And I just request you, Mr. Subramanian, to please stay on stage with us. We would like to now welcome our chief guest and present him with a small token of our appreciation.
Yes, indeed. In his capacity as the governor of the RBI, Mr. Das has held the key to comprehending India's tremendous growth story. His stewardship has regulated and secured the monetary policy to institute this steadfast, this robust economy that we see thriving now.
Absolutely. A small token of our appreciation. In fact, at the World Economic Forum in Davos just this year, he ascertained that there is a lot of international confidence in India, a lot of strong technology that's been built around India, and such is the high resolve of the Indian economy.
Yes, indeed. Now, to speak to us further about the way ahead, Mr. Shaktikanta Das, may we request you to please address us.
Mr. Subramanian, members of the entire team etnow, distinguished panelists and other experts who would be taking part in various discussions during the course of rest of the day, members of the audience, ladies and gentlemen. I'm extremely delighted to be here at this event with etnow, which I think incidentally is the second event of etnow that I am participating. The earlier one I had participated, if I recall correctly, was in December 2019. And much has happened after that. And here we are, and where etnow completes its 15 years. So let me at the outset congratulate the entire team of etnow for their journey over the last 15 years, which has been marked by several high points and extensive coverage of the Indian economy, the global economy, and analytical discussions and other interactions which they have participated. There was also a bit of a good news from the Reserve Bank of India, which was already mentioned by Sri Subramanian. Recently, the last week, the Reserve Bank received the Risk Manager of the Year 2024 award from Central Banking London. And over the years, particularly in the recent years, the steps that we have taken to build up internal risk management skills within RBI to, the risk management within RBI. It's a true recognition of that, and the citation clearly recognizes that RBI has now reached a certain high point of all the leading international institutions, particularly the financial institutions and central banks. Now, this is my first public interaction after the monetary policy statement, which I made on 7th of this month. That's about 10 days from now, and so therefore the silent period is over, and I would like to take off from where we left in the monetary policy and try and provide a little bit of further elaboration on the rationale behind the various decisions that we have taken in this latest monetary policy of June. Much was said about the economic growth of India, the GDP growth of India. As you are all aware, last year, 23-24, when we started, the RBI's projection was 6.5% GDP growth for 23-24. The markets and the analysts were pitching a little bit lower, and we were considered as being on the optimistic side. But we continued our journey of optimism because there was enough basis to it, and then we increased it to 7%. The market also revised upwards. The analysts also recognized the trends which were building up, and soon, others also revised their GDP projections upwards. And when we said 7%, it was also perceived as optimistic. Then I think somewhere during the course of the year, earlier, perhaps in January or February, I remember having said in a public forum that we will not be surprised if the GDP growth touches 8%. And indeed, it not only touched 8%, but has exceeded 8%. 8.2 is what has come out. If you look at the average of the last 3 years, the average is 8.3%. The average annual GDP growth over the last 3 years is 8.3%. For the current year also, that is 24-25, we have given a projection of 7.2%, and the earlier projection was 7%. Now, I don't want to get into too much of statistics because, statistics has its own, two sides to statistics. But let me say why we increased the growth. Why did we increase by 20 basis points? Now, that is because, number one, we see the growth momentum. We see a very strong momentum of economic activities, a strong momentum of growth. If you look at the last quarter, that is Q4 of 23-24, that is January to March this year, the momentum of economic activity is much stronger. In fact, it was perhaps the strongest momentum of the last year. And the growth in the last quarter itself was 7.6%. Although the implicit number behind NSO's number was 5.9%, but the momentum was so strong that it came at 7.6%, resulting in the high growth of last year. And that same strong momentum of economic activity has also continued into the first quarter of this year. April and May are over. We have in Reserve Bank, we have the data for it. June also, we are in the third week of June now. The data is also available with us. So we see the momentum is well sustained. And we are therefore quite sanguine and quite optimistic that the projection which we have given for the first quarter of this year, 7.3%, we are quite optimistic that it will indeed be 7.3%. And there is no reason why the momentum will slow down. That's the first point. So the momentum of economic activity continues to be strong. The second point, there are several other points, I will not go into the details, but the second point I would like to highlight is that rural demand, in the consumption side, rural demand which was lagging behind for considerable period of time since the COVID, and perhaps in the first half of last year also, has also beginning to improve and improve quite visibly. The rural demand, rural consumption has picked up, it has gone up. FMCG sales in the rural sector has also increased. The demand for NREGA labor has also gone down. The agricultural season also looks very optimistic because of the projections of above normal monsoon, southwest monsoon this year. So therefore, rural demand is something which is picking up, which was not there earlier. And all our analysis, all the trends which have come to us, it indicate that the rural demand will hold. And as the government capex starts unfolding, as the expenditure from the government side as well as from the private investment, they start picking up, I think rural demand this year will be well sustained. The third point is that the external sector, notwithstanding that the global growth is still below its historical average. In fact, from 2000 to 2019, the average annual global growth, the trend growth, GDP growth was about 3.8%. But the IMF has projected 3.2% for current year as well as 3.2% for next year. Now, notwithstanding the fact that the global growth is below the historical trend, but still 3.2% means that the external sector, the external demand will also continue to be strong. And that would mean that it will give a lot of support to our exports, especially the services exports. In fact, services exports of India are doing very well, especially, IT services and other services. It's no more confined to just IT, but it's now business services, it is accountancy, it is legal, it is so many other activities in the, in the realm of services where India is, where things are looking up so far as the external demand is concerned for Indian services sector. So therefore, it's the momentum of economic activity, number one. Number two, rural demand is picking up. Number three, the external sector also offers a lot of promise for the Indian economy. Add to that the fact that the urban demand is also holding on, mainly supported by increased activity in the services sector. Add to that the good monsoon which is expected. Add to that the revival of investment which is also happening. Private investment. When I'm saying private investment, I'm specifically referring, when I'm saying investment, I'm specifically referring to private investment. Government capex has been very strong in the last 2 to 3 years. But private investment is now picking up. If you look at the corporate results which have come out for the last year, you will find that, the size and the numbers relating to fixed assets have gone up. Earlier, corporates, because of their deleveraged balance sheets, the corporates were holding a lot of cash, a lot of surplus cash they were holding. But now it has moved into fixed assets. So if you look at the balance sheets of corporates, the size of the fixed assets have also grown. And they have shown very good growth. Now that is one evidence that private investment is taking place. You will hear several bankers subsequently during today. They will highlight perhaps even better the demand that the banks are experiencing from the corporate sector. And there is clear visibility of investment happening in certain key sectors of the economy, mainly related to infrastructure activities, whether it is steel or cement and other areas like electronics, chemicals and fertilizers, pharmaceuticals, oil and gas. So all these sectors, basically primarily infrastructure sectors and also electronics and certain capital goods. Capital goods imports have also, electronic goods and capital good imports are also looking up, which means that that is going into more of productive activity. So because taking all these things into account, we have therefore increased our growth rate to 7.2%. Now turning to inflation, inflation is moderating, but at a very slow pace. We are fairly confident that the downward journey of inflation will continue. We are pretty optimistic that the inflation will continue to moderate, but the pace of moderation seems to be very, very slow. And it is so worldwide. If you look at the numbers, even in advanced economies, the pace of disinflation is very slow. in the advanced economies also we are coming across instances where inflation has again mildly gone up, and or rather it has kept higher than what was estimated. So therefore, this last mile of the disinflation journey is proving to be very sticky, arduous, and very slow. That requires a lot of patience, and we need to be watchful. But we are quite confident about inflation moderating to 4%. How long it will take? We have given out a path in our monetary policy statement and also in the monetary policy report, which we come out every 6 months. So for the time being, we are sticking to that because there are lots of uncertainties also. And the uncertainties come from the fact that the challenges of food inflation still remain. Food inflation continues to be high. In fact, in the last 6 to 7 months, the average food inflation is about 8%. Core inflation has substantially moderated and has reached a historical low of 3%. That was the number for May. In May, the core inflation was 3%, whereas food inflation was 7.9%. So the disinflation process is getting a lot of resistance from the food inflation remaining stubborn and remaining very high, and that's primarily because of supply side factors which are affected by the weather conditions. The extreme heat last summer has affected the pulses cultivation. It has affected the vegetable production. So therefore, there are challenges in the journey for disinflation, and we need to be very mindful of that. International metal prices have also started going up, of late. So taking into all these factors, we have given our projection that current year's average inflation will be 4.5%. Inflation will continue. These are our projections. Inflation will continue to moderate, but will continue at a slow pace. So therefore, at the current juncture, we thought it's most appropriate to avoid any kind of adventurism and stick to the path of inflation that we had earlier laid out. And as a central bank, we will remain very watchful and determine our actions as we go forward. Having said that, let me say that the growth inflation dynamics in India is very well placed. There is enough room, considering the fact that inflation is moderating, there is enough room for us to sort of focus clearly on inflation. There is also enough room for economic growth to pick up. Whatever moderation in inflation we have achieved, thanks to the 250 basis points rate cut, and thanks to the actively disinflationary stance that we have taken since the beginning of 2022-23, that is since April 2022, immediately after the commencement of the war in Ukraine, and the monetary tightening that we did, which was mostly done upfront, which was front-loaded. Because of that, the core inflation has come down, and we have been able to achieve that without sacrifice in growth. So therefore, I am very sort of happy to share with you that the balance we are expected to maintain between inflation and growth, which is enshrined into the relevant provision in the Reserve Bank of India Act, when it talks about monetary policy framework, we have adhered to that balance, which is the expectation of the lawmakers as embodied in the Reserve Bank of India Act. Finally, before I conclude, let me say that not only the domestic sector, the external sector, I mentioned about export demand and other potential, but in the external sector, two important things are happening. Number one, our current account deficit has remained very low. In fact, compared to very high numbers in the past years, let me not go into the details of the numbers, but in the first 3 quarters of 23-24, that means from April 23 to December 23, the current account deficit was 1.2%. Our teams are working on the fourth quarter numbers. The fourth quarter numbers look to be even lower. And when you look at the annual current account deficit number, I will not be surprised next week when we publish the current account deficit numbers for this year. It could be even lower than 1%. So the current account deficit looks very promising, and the reserves have reached, you would have seen the latest number, the reserves have reached 655.8 billion US dollars. The forex reserves have reached $655.8 billion. So that sort of gives a lot of confidence to international investors about the stability of Indian markets. And we will continue to build up reserves opportunistically whenever there is an opportunity. I have said it earlier also, it's a matter of stated policy. We don't shy away from that. We will continue to build up our reserves opportunistically whenever there is an opportunity, whenever the market allows it, so that a strong reserves also does help us to maintain the volatility in the markets and also give that confidence to international investors that India will be able to fulfill its external payment obligations. Finally, let me conclude by saying that as a central bank, you are aware the Reserve Bank has got a wide range of functions. It's what they call a full-service central bank. Few central banks in the world have that kind of range of activities, starting from payment systems to financial inclusion, to monetary policy, to regulation of banking, supervision of banking and non-banking sector. So a whole range of activities we have, and our primary responsibility is to ensure financial stability. And as an institution, Reserve Bank remains committed to maintain financial stability in the country and remain future ready for the growing economy that India is and which India promises to be also in the future. We have spelled out some action plan as a part of the agenda for RBI at 100, and which was released along with the monetary policy statement on 7th of June. So with this, let me conclude, and thank you very much for your patient hearing. Thank you.
When the words come from Governor Das, the confidence, the kind of reassurance that we get is beyond measure, and it's great to continue this conversation with Editor-in-Chief of etnow and etnow Swadesh, Nikunj Dalmia. Let's have more leadership conversations going. Over to you, Nikunj.
Good evening, everyone, and thank you for being part of etnow Dialogues. 15 years, well, it means a lot, and etnow as a brand would have not reached where it is without some of you really supporting us, so thank you very much. Governor, all I can say, sir, is a big thank you. A big thank you on behalf of everyone in this room, those who are watching the telecast live, and those who would be watching the show later on. It is an absolute honor and a pleasure for us to have you here. Governor, your opening remarks in a sense really set the tone. The economy is growing, inflation is coming under control. Under your leadership, Reserve Bank of India has ensured that the financial stability remains strong and robust, and forex reserves are strong. So can I say that this is the best macro setup you've seen, at least in your tenure?
Yeah, I would think so. It's, the mix, the confluence of various factors are very robust. But having said that, I would like to also qualify it by saying that should not lead us into any kind of complacency or overconfidence. Markets keep changing, international developments keep happening, there could be surprises. So one has to be very alert and agile at all times and try to sort of watch the developments in every corner of, our own economy, and also what's happening all around. Because things can sort of turn, it takes very little time for the cycle to change. So one needs to be very alert and agile, no room for complacency, but yes, at the same time, I think the current confluence of factors are strongly favorable to India's growth and stability.
Governor, your FY24 estimates, which Reserve Bank of India initially started with, the final number was much above than what your initial estimates were. So for FY25 also, the initial start number is 7.2 to be specific. Are you leaving a lot of headroom for a positive surprise?
There can be positive surprises. I don't rule it out, but I think You see, we give a number when we are totally convinced about it. And our approach is not to sort of gamble by giving a higher number. Our overall approach as a central bank is always very conservative in the sense that when we are absolutely sure about a particular number, we give it. Now we are certain about 7.2%. Of course, yes, there are downsides emanating from possible downside risks. Not downsides, but downside risks emanating from geopolitical conflicts, accentuating further, or, the trade and the capital flow fragmentations becoming more accentuated. So there are downside risks emanating from the external sector. But within that, as I explained a little earlier in my address, in my opening remarks, I think the momentum continues to be strong. So we therefore thought that 7.2% is very much achievable. Even in the first quarter, let me say that 7.3%, I said it should be possible. We expect it very much to materialize, although our internal nowcasting tells me a slightly higher number. But I'm not saying that in public. I would rather wait for the number to come and then talk about it.
So, Governor, when the Reserve Bank of India Governor is indicating something, he's thought through it. And now I'm just putting the dots here, which is then your earlier forecast, while you were describing the forecast, your choice of words was cautiously optimistic. The word cautiously optimistic is out. The word confidence has made a comeback.
Yeah, I think we are getting used to a better forecasting scenario. And I hope it sustains, because whether in matters of inflation, again touch wood, whether in matters of inflation or growth forecast, you would have seen in the last few years, by and large, the numbers are coming almost in line with our projections. So our forecasting models, our overall, methods, we have brought about a lot of improvements. So that seems to be working. And we are quite confident about the 7.2 for the current year.
Governor, last couple of years, we've had a patchy monsoon. The economy has managed to grow despite a patchy monsoon. Looks like we are in for a normal monsoon this year. So yeah, assumptions of your GDP growth, what kind of monsoon factor it is accounting in for?
No, if you see the monetary policy resolution, I don't know whether we mentioned, I think we did mention that we assume always a normal monsoon. Because monsoon, again, the uncertainty always persists. Even this year also, after setting in a bit early, for the last 15-20 days, monsoon has slightly slowed down. And currently there is extremely severe heat conditions prevailing in northern states. But the monsoon will revive according to the IMD. But for the projections, for our estimate of GDP growth, and in all respects in monetary policy, we have assumed a normal monsoon.
Governor, this is the first time we are speaking to you in a public forum. So purely from a regulator standpoint, the continuity of the government, what does that mean for a regulator?
You see, for us, it is the government. There is always a government. Irrespective of which party forms the government, there is always a government. So as a central bank, and for every citizen in the country, there is always a government. So I'll leave it at that.
Sir, everybody expects you to leave it at that. Everybody expects you to leave it that only.
So
not
it
say
is on
anything beyond
expected
that.
lines, no? So I have I have played the shot which you expected.
So, Governor, since we are talking about shots, let's look at the pitch report. Global conditions are stable. If one looks at the weather conditions locally also are getting better. So is the stage now getting ready for Reserve Bank of India to do the obvious, which is you've stated that you want to do the obvious, change the stance?
This is one point which we have explained quite a lot in the monetary policy statement. Now, you see, we are maintaining the growth inflation balance. And in that growth inflation balance, the interest rates, the repo rate is 6.5%. And it seems to be working because growth continues to remain robust. But inflation is moderating very, very slowly. So if you are expecting a faster moderation of inflation, then we have to take much more drastic measures. In terms of stance, in terms of rate, we'll have to take a much more drastic measure if we want inflation to be brought down. But then we have to also weigh what would be the growth sacrifice that we would be making for the economy. In fact, if you recall, towards the end of 2021 and early 2022, there was all-round clamor as to why the Reserve Bank is not increasing the rates. Before March of 2022, there was a considerable body of opinion outside saying that the Reserve Bank was falling behind the curve. And that view seemed to be gaining traction. But we were very single-minded that we have taken the right decision, and at that point of time, towards the end of financial year 21-22, that is, let's say, from about October to, or rather from December 22 to December 21 to just in the 4-5 months preceding the Ukraine war, we wanted growth to revive. We wanted clear evidence that the growth has revived. So therefore, we refrained from increasing the rates or tightening the stance. Because our job is to ensure a proper, appropriate balancing between growth and inflation. At this point of time, there is again a clamor that, one should change the stance. But we want clear evidence that inflation should moderate. And moderate, we need more evidence that inflation should moderate and perhaps a little faster. As I explained, core inflation has come down, but the biggest uncertainty is food inflation. The average food inflation has been 8% in the last 6 to 7 months. And that is slowing down the disinflation of the headline numbers. Headline still remains at 4.75 as per the latest number. And then in the second quarter, it is likely to go down to 3.8. But again, it will go up to 4.5, 4.6. So you are within striking distance of 5%. And if there are a series of weather events or something goes wrong on the weather front, the vegetable prices and other prices of the key vegetables, the prices may go up. The food inflation again may go up. International food prices, I talked about international metal prices going up. In fact, the global food price index has also started going up. So therefore, it could even touch 5%. So therefore, it will be too premature to talk in terms of changing the stance. I think I used the word saying that any form of adventurism should be shunned. At this point of time, we should avoid any form of adventurism. It's better to stay the course and be watchful and take the step as play ball by ball.
So in your terminology, the inflation elephant has gone for a walk. It's too early to assume that it's gone in hibernation.
You see, the elephant is definitely going towards the forest. Okay. No doubt on that. But it's taking its own time. So we have to be cautious and watchful.
Okay. Governor, the dividend from RBI, 2 lakh crore, is it in sync with Reserve Bank of India's balance sheet, which is getting expanded, Governor?
You see, the balance sheet size obviously is growing by about 10% or so annually. But this year, you look at the annual accounts, they have been already published. It's there in our annual report. The annual statement of accounts have already been published. And it's mainly our incomes from foreign assets have gone up. Significantly, the income from foreign assets have gone up. That is mainly decided by the fact that all the advanced countries or all the countries where we have deployed our forex reserves by investing in their securities and government securities and treasury bills, the interest rates have gone up there. So naturally, in all our investments, we are getting, we rotate our investments also quite frequently. So naturally, the income from foreign assets have gone up significantly, and it is determined, it's just an arithmetical number that we have to arrive at following the principles laid down by the Committee on Economic Capital Framework, the Bimal Jalan Committee. according to that recommendation, it is mainly out of, I would say, the foreign assets income.
Governor, Reserve Bank of India's primary goal is to maintain financial stability. But I'd like to draw your attention to the financial markets. The financial market cap right now is at 5 trillion. The real economy is at 4 trillion, which means the financial economy is now higher than the real economy. What do you make of this big expansion in the financial economy? As a regulator, we want to hear your thoughts.
No, you cannot sort of draw a conclusion from these numbers, from the headline numbers of nominal GDP, and the implying is that the question that is some part of the market or some segment of the market, is it getting overheated? So that is, I think, to put it, plainly, I think that is the question which you are asking. I think SEBI is engaged with that. So let me not, intrude into SEBI's territory and start talking about the stock markets. I think SEBI is fully seized of what's happening in the markets, and we have our regular interactions with the SEBI as a part of the financial stability and development, FSDC, the Financial Stability and Development Council. We have also a subcommittee which is chaired by the governor. The chairperson, SEBI, is a member of that. Under the aegis of that, we have an early warning group which meets from time to time and discuss everything that's happening in the financial markets. And if there is anything which is of discomfort, the early warning group addresses that and brings it to our notice. So far as we are concerned, that is how we deal with it. At the moment, so far as stock markets are concerned, let me leave it to SEBI to talk about it. Other signs, wherever we feel we have our views on, on the markets, which may not necessarily fall in our domain, we share our thoughts with the SEBI.
What about the activity or retail frenzy in the futures and the options market? Given that futures and the options market indirectly could have impact on retail balance sheets, are you monitoring that?
Yeah, the early warning group is monitoring that. SEBI and the Reserve Bank together, we are monitoring that. In fact, currently the options and futures, the volumes are pretty large. It's, I think you're probably referring to that. It's perhaps larger than the nominal GDP of the country. So we have discussed these matters with SEBI. SEBI, I think, has taken a few measures, and they are examining it, and I think they will deal with it.
In the past, Reserve Bank of India has taken proactive measures when they thought that there was a bubble in the real estate sector. The economy is growing and the real estate sector is also growing. What are your thoughts there in terms of the expansion which is happening in the real estate sector? This is something Reserve Bank of India in the past has acted on.
You see, we are watching the developments in all segments of the credit market. Last year in November, we took certain action against unsecured loans. Not against unsecured loans, but in that particular sector. Unsecured loans, then things like bank lending to NBFCs. So wherever we saw some signs of a possible stress coming, in fact, at that point of time when we took the measures, there was nothing happening really, there was nothing alarming. But our conclusion was that if we leave it as it is, if we leave it unattended, or if we leave it as it is, then it could have led to a possible crisis at a future date. So we acted preemptively. And you would have seen that, in fact, the numbers speak for themselves. The retail lending, the unsecured retail lending, the other personal loans, what they call it in banking terminology, or the credit card outstandings, or for that matter, the bank lending to NBFCs, they have all moderated. They have all moderated, and we wanted a certain level of due diligence and discipline to be brought into the system, and that has been brought in. So we are watching all these segments of even the real estate sector, including housing. We are monitoring it. The numbers at times may look very high because, you see, SDFC merger took place last year. So that was not a part of the banking sector assets. That was a part of the NBFC. It was a housing finance institution. The SDFC was a housing finance institution, so that got merged with the SDFC bank. So therefore, because of the impact of the merger, the growth in the, the real estate sector or housing sector may look high. But if you net it out, net off the impact of SDFC merger, the growth is within, nothing to worry about. But we are monitoring it nonetheless. And a major difference between what is happening in the, now in the real estate or the housing sector in particular, and the position which prevailed, let us say, more than about 10 years ago, is that now you have a RERA. So the RERA is now regulating particularly the housing sector. So the kind of asset bubble which we saw earlier in the housing sector, the paradigm has changed. And from Reserve Bank, we are monitoring it very, very closely, very, very intensively. And at the moment, it is all right. If at some point of time, some action becomes necessary, not just in the real estate sector, but any other sector, the Reserve Bank will definitely act proactively.
In your keynote address, Governor, you mentioned that you would continue to buffer up the Forex Reserve. The Forex Reserve of India north of $600 billion. Growth is strong. CAD is coming under control. So is there a threshold beyond which you would say that you could order adequate Forex reserves?
No, we don't have any such particular number in mind. India is a growing economy, and some people like to see the Forex reserves as a percentage of GDP. I mean, it cannot be looked at in that way, because when your GDP is growing, naturally your export earning by many companies are also going up. Companies are also taking care of their own Forex management. We don't have any specific number that this will be our Forex reserves and then stop, because the economy is growing. Financial activities are growing. And we would like our Forex reserves to become even stronger. And today, I think India is, probably the fourth or the fifth, largest reserves that we have. I think it's the fourth or fifth largest reserves that any country, among the countries. So we would like to keep on building it.
Governor, the Reserve Bank of India gold reserve now are north of 800 tons. And according to RBI's balance sheet, the last year addition was about 27 tons. Progressively, would you be increasing the component of gold in the Forex Reserve? Because globally also there seems to be a tilt by central bankers away from treasury towards gold.
You see, the gold purchased by the Reserve Bank, in fact, had stopped for quite some time. In 2011, I think 200 tons were acquired from the IMF. It's all in public domain. I'm not revealing any secret, any state secret. I think 200 tons were acquired from the IMF in 2011. But after that, RBI was not acquiring the gold. Then in December 2018, some small quantity of gold was purchased. But after that, if you see annually, and it's all there in the half-yearly reports. So after that, if you see annually, we have been buying gold. That is because our priority is to diversify the deployment of our Forex reserves in more currencies and in different kind of assets, particularly gold. And if you look at the long-term price of gold, gold prices in the long run have always increased. They might have fallen in between, but on a long period average, if you see, the gold prices have invariably gone up. So therefore, gold is considered therefore as a kind of a permanent hedge that you can have against external uncertainties and challenges. So therefore, we have now, we do buy the gold, but we naturally, buy it whenever there is an opportune moment. And there is a high-level committee which decides the strategy of purchase of gold. Yes, building up gold reserves is a part of our reserve deployment, and we will continue with that. But it's not as if that we will go on mindlessly buying gold. We have to be also very mindful of the international prices. But approach is, yes, we need to sort of diversify the deployment of our Forex reserves, and gold is a part of that. So naturally, the gold purchases will continue.
Governor, the theme of today's evening is India 2030. We are in 2024. 6 years from now, if you're engaging in a similar conversation, a similar forum, what are the three big marquee changes which the regulator feels will happen in the Indian financial sector?
You see, 6 years from now, I'll be sitting somewhere there. So But on a more serious note, we have laid down the agenda for RBI at 100, which is a part of our, the monetary policy statement, which we made. When we celebrated our RBI, the 100th year of Reserve Bank on 1st of April, where the Prime Minister also, he addressed the entire gathering. After that, we have worked and we have come out with this agenda for RBI at 100. Reserve Bank as an institution needs to be future ready. And we have spelled out several steps, I think about 9 or 10 different areas where we have spelled out what kind of steps. This is not a, this is a dynamic document. It cannot be a static document because the world is changing and changing fast. So you cannot just decide your action plan for 10 years and just stick to that. You have to constantly update it and modify that. And modify meaning upgrade that from time to time. Supplement that as may be necessary. But yes, we would like Reserve Bank, as we have said in that document, we would like Reserve Bank to be a model central bank, especially for the global south. We would like Reserve Bank as a central bank which has consistently maintained financial stability and has ensured a conducive ecosystem for the overall economy to grow.
Governor, in our interaction in 2021, I'm just going to quote your remarks here. You said that the Indian fintech is like a Ferrari. What Indian financial sector needs is a small car. How do you see fintech now moving, given that Reserve Bank of India, they are not against innovation, but I guess the regulation part is coming back in fintech. That's the impression everyone has.
No, just a slight correction. I never said a small car. I didn't say that India is for a small car. No, we have bigger ambitions. We would like Ferraris. We would like other, modern varieties also to be on the road. All that I said is that you cannot have a very advanced Ferrari-like car and say that I will drive at my own sweet will. I will not follow any traffic rules. Even if you have a Ferrari, when you are driving on a road, there is a traffic and you have to follow the traffic rules. And as the regulator, it's our responsibility to ensure that there are appropriate traffic rules, there are appropriate regulatory guidelines which will have to be introduced. You cannot say that I have a great innovation and I can do anything that I wish in the market. Similar to, somebody having a very high-speed car driving at a reckless speed and in the process killing somebody else, some third party standing on the pavement. You cannot do that. There are elderly people on the road. There are children on the road. There are people walking in the pavement. There are cyclists. There are scooterists, there are auto rickshaws. So you are traveling in a road and the road is a public space. So you have to follow the traffic rules. But yes, you can have a big car, you can have a Ferrari, by all means have a Ferrari, by all means grow big, and you must grow big, but follow the rules of the game. That is our philosophy, and we would provide, our effort is to provide a set of rules of the game wherein the various fintech sector players, they have sufficient space to play, bring in innovation, create jobs, and provide necessary impetus to growth. That is very important. In fact, we have come out with we have now called for applications for recognition as a self-regulatory organization for the fintech sector in particular. We are going to call for applications for the, SRO, that is for, the self-regulatory organization for the NBFCs shortly. But we have already called for applications for having an SRO for the fintech sector. And last year when I participated in the Global Fintech Festival, I think that was in September or October, I had said that by next GFF, which incidentally this year is in end of August, I had said that I would like to see one fintech SRO at least having taken shape. And from our side, we are working towards that. I hope, and I'm quite optimistic, that the fintech sector will also soon come together, form an SRO, make the application, get the recognition from the Reserve Bank and start working, because SRO is very important. It provides a kind of interface between us and the market and the players. They tell us what all developments are taking place in the market, what all new technologies are coming. We in turn sort of address their concerns, take their concerns and suggestions into account. So it's a kind of a platform which provides an interface. So therefore we are all for innovation, but we would like to have responsible innovation and innovation becoming fintechs to follow the rules of the game.
Okay, Governor, last 3 questions. I'll not extend my appointment beyond that. Again, a big picture question, which is that who do you think in the financial sector has the right to win? Big banks, innovative banks, who has the right to win in the financial sector in India?
I think that the market has to decide who has the right. You can't say who has the right to win, but that the market will decide. And that also the individual institutions, how they play, what kind of governance they have, what kind of management systems they have, it is their responsibility. As a regulator, we have no preference. We do not discriminate between a bank of, a bank of this type or a bank of that type. It's for the managements of individual banks to, do their best to have their own growth ambitions and take all necessary measures for fulfillment of their growth ambitions within, of course, the broad parameter of the regulatory guidelines. And our job is to provide a vibrant and a robust ecosystem where everybody grows.
Final 2 questions, Governor. Is it true that your day starts with Economic Times and it ends with etnow?
My day starts with multiple newspapers. Now, whether it is Economic Times or some other paper, I think let's leave it at that. But yes, definitely Economic Times is one of those multiple papers. And during the day, the channel remains, some business channel is always on my, in the office on a silent mode, of course. But I keep shuffling the channels. And one of the channels is certainly etnow.
Thank you, Governor. But that was not my last question. My last question, is everyone ready? No, so last question, Governor, to you is that if given an option or choice to continue as RBI Governor in the 3rd term, would you be ready to accept it?
Well, that's a very, very hypothetical question. And why sort of, I still have 6 months' time, so let's see.
If you hear in next 3 months, what would be your first answer? If you hear something, what would be your first answer from the government that, okay, they would like you to serve as the 3rd government? Are you inclined towards it?
You see, I always use the analogy of cricket. When you go out to bat, you don't go with a preset mind that I'm going to play this shot. You wait for the ball to come. When the ball, from the action of the bowler, you see some movement. You make an assessment that this is how he is going to bowl. But these days, the bowlers are far too intelligent. They will show one action but bowl in the opposite direction. So you have to be watchful. The ball has to pitch. Then you have to see in which direction the ball is taking the turn. You have to see whether it's a bouncer, a yorker, or it's, what's the nature of the ball. And then you have to play your shot. So therefore, a batsman cannot decide what shot he is going to play before the ball has pitched or before, if it's a full toss, before it has pitched.
Ladies and gentlemen, if a pantheon of great central governors in the world is ever to be made, all I can say is that the RBI governors, Mr. Shaktikanta's name would be right up at the pedestal. From COVID crisis to managing the economy to ensuring that the Indian banking system remains robust, I guess all of us really are very grateful, thankful to the way Reserve Bank of India has really ensured that the financial stability of the system remains ensured. I would urge everyone to give him a standing ovation. He is someone who has really ensured that India goes through tough times, through peaks and troughs. Reserve Bank of India has ensured that the Indian financial system remains robust. Thank you, Governor.
Thank you so very much, Nikunj, for spearheading that conversation and lots of headlines. Mr. Das, appreciate all of those insights. Thank you so very much for sharing those with us. So a lot that was discussed that I'm sure we can absorb and that will be flashing on the channel as some of our top headlines this evening. The fact that the RBI Governor himself saying that the current account deficit numbers look very promising, that the gap could actually be below 1% in Q4 of FY24 when the data comes out. He also, Vikram was talking about the GDP number likely to be on the higher side. Music to everyone's ears, I'm guessing.
Absolutely. The economy growing at the pace that it is growing in. Obviously, inflation is a worry, but it's also trending down. So perhaps the idea is to control inflation in a calibrated way, and that's exactly what is happening. Of course, this kind of dialogue is going to continue. We are going to have this interesting conversation next. The chairman of India's largest public sector bank, the State Bank of India, Dinesh Kumar Khara, is with us as well, and we are about to have that conversation too.
Yes, indeed. And we'll be talking about the focus of the Indian financial market, focusing on funding India's Viksit Bharat aspiration. And for this, ladies and gentlemen, please put your hands together as we welcome on stage the chairman of India's largest public sector bank, the State Bank of India, none other than Mr. Dinesh Kumar Khara. And taking forward that conversation yet again is Nikunj Dalmia, Editor-in-Chief of etnow and etnow Swadesh. Gentlemen, over to you. I request everyone in the audience as well to please come right back in, take your seats. This is a conversation that you don't want to miss.
Good evening, everyone. So, Khara Sahab, how much do you agree with the governor? How much do you disagree with the governor? We are not on air right now.
No, I think governor has been very, very analytical. And I would say that he has been reading the trends very well. So I tend to agree with him almost fully.
Mr. Chadwal just made a point that while governor's job is to ensure that the match is played with rules and regulation, the real wicket keeper of the economy is SBI. As India's largest PSU bank, what is your understanding of where growth is headed? What is your understanding of where the credit offtake and the retail balance sheet is headed? Can you give us the big picture?
Yeah, the way I look at it is, of course, what Governor mentioned in terms of the GDP growth rate, we tend to more or less agree. Rather, we have got little more optimistic growth trends, which we have in our own internal assessments. And based upon that, we are quite hopeful that we should be in a position to maintain our growth trajectory, which we have demonstrated even in the last year. So which means that around 15 to 16% kind of a growth. And keeping that in mind, the major change which we are observing that as compared to what we saw in the previous years, it used to be essentially retail growth which used to be leading the balance sheet growth. Now we have started seeing good trends even in SME space. And even for that matter, what Governor mentioned in terms of the private investment being seen on the ground, that is the reality, and that is the reason why we have a decent pipeline in terms of the corporate credit also. So I think the year which we see will witness growth, retail, corporate, SME, and even in, for that matter, agriculture sector also. So perhaps I would say that this is going to be one of the best possible year as far as the economic growth of the economy is concerned.
And you think the credit cycle of mid-teens or between 15 to 17% could last despite a high base effect for next 3 years at least?
Well, of course, I think the way things are emerging, I always say that the growth is a function of how the GDP or the macro will look like. And our expectation is that the macro growth should be somewhere in the range of 7.5 to about 8. And if at all that is the kind of a situation, I think around 14-15% kind of a growth should be a reality.
and you can grow without the stress of NPAs, because the hallmark for SBI in last 2 years has been strong growth, low NPAs, no capital raise. Will this template continue?
Well, of course, that is attributed to partly to the ecosystem which has taken roots in the economy, partly also to the responsible borrowing. And part of it is the effective control mechanism, thanks to the structured, unstructured data which is available, which helps us in identifying the red flags in good time and initiate the recovery actions in good time. So I would say that it is overall the culmination of multiple factors which has led to this kind of a situation, and I don't see any kind of a let-up on these very important contributors for ensuring the quality of the loan book.
I'd like to draw your attention to the liability franchise. And there seems to be a war of liability. While State Bank of India so far has managed to protect its liability franchise, given that money is now genuinely moving into stock markets, not into fixed deposits, could that be a challenge for even SBI going forward?
Well, I think each of the segment of economy has got its own ability to absorb the money. So when you talk about the capital markets, see, the point is that whether the money which is going to the capital market, is it contributing to the froth or is it contributing to the capital formation? Froth can be created up to a level, not beyond that. So I would say that when it comes to the money which remains with the banking system or is lent, if at all it is lent for SME, for agriculture or for corporate, generally it goes for the capital formation. So I think if at all we have to sustain the growth of the economy, the capital formation perhaps cannot be ignored. Now the other question which you mentioned, you have in mind, is essentially relating to the liquidity and the related challenges. I would say that there are 2 or 3 major drivers as far as the liquidity are concerned. One among them is government is one of the major contributor in terms of the liquidity, the kind of spending which they do. We have seen that there was a point of time when the spending was hardly any, and which of course have shown up in terms of the fiscal numbers also. And also now the government finances, they are believing just in time kind of a funding, so it does not leave much of float in the system. Thus, the second source of liquidity could be RBI. Here also the focus is more in terms of managing inflation and ensuring that there is adequate liquidity in the system. Not excess, not short, adequate liquidity in the system. So I think these are the facts which we'll have to acknowledge. And I rather perceive it in the sense that when the economy moves from developing to the developed state, there cannot be an excess liquidity situation either. Whether the government contributes or the central bank contributes, there cannot be excess liquidity situation. So I think given that, it's a reality. So perhaps allocation of the liquidity between stock market, financial markets and the banking system will take its course. So that's how I look at it. But yes, of course, ability to source deposits across the geography by offering multiple products will perhaps be the differentiator.
Mr. Kara, I must compliment you for what you've done in terms of changing the entire culture at SBI, and especially in terms of one particular financial number which seems to be standing out is your ROA. I mean, who would have thought that State Bank of India would be anywhere close to 1%? It is now not the 1%. So on the ROA front, do you think large part of the heavy lifting is done? Can ROAs continue to move higher, or they will stabilize now?
My effort is to continue to improve it.
Do you think you can go close to 2%?
At least in the near future, my target is to take it to 1.10. And of course, last quarter we were actually at 1.26, but for the year as a whole, we were at 1.04. So aim and ambition is to take it to 1.10, at least for a year. And of course, we'll keep on improving the numbers as we reach them.
Wow, fantastic. If you have to maintain this kind of growth, you've not raised enough tier 1 capital or capital from the equity market. At what point in next 12 to 18 months or after that, would you be coming to the market to raise pure equity capital?
Incidentally, I have not raised the capital, but in last 3 years' time, we have plowed back 1.10 trillion Indian rupees. And that is something which has led to the situation where our CET1 is perhaps the highest in 1 decade. So actually speaking, our ROE is much higher than our loan book growth. So that gives us the organic way of generating capital. So that is one of the reasons why we have not done it. But yes, of course, we are very mindful, and we believe that with we have got a loan book of about 37 trillion, and at this kind of a capital, we can easily support about 7 trillion worth of addition to the loan book, which actually turns out to be about 20% growth. So we are expecting about 15% growth, but we very closely we are evaluating the situation on ground, and as and when required, we can reach out the capital. Raising capital is not a challenge.
Do you look at your stock price? Do you check where the stock price of SBI has gone?
I do look at it. At the end of the day, I am supposed to get the numbers, where it was, how did it move. That is something which I do.
And when it hit a new high, how did you react?
Yeah, it gives me a lot of satisfaction because I in turn have created value for my stakeholders.
So what do you mind is the fair value of SBI?
Well, even now, I would say that it is being, considering the kind of a network which we have, considering the kind of quality of book which it is, and the way we are investing into technology, the way we are actually creating the muscles of the bank, I would say that it is still underrated.
Well, please make note of it. That's what I would say.
And I think they have started realizing, maybe in the course of time, the realization will be even more deeper also.
A lot of fund managers are here, they still buy private banks. So I bolta hu PSU bank lena chahiye humko. Mr. Khara, so the theme of today's evening is India 2030. As India's biggest banker, what are the 3 things which you think will change in next 4 to 5 years for SBI and for the Indian banking sector?
Well, I think some of the early signs we have already seen, the way the ecosystem has got evolved. That is something for the eventual good of the economy. I think we will continue to see an improvement over this, which may look to be incremental, but it will have substantial impact on the way we conduct our businesses. That is one very important thing which will be seen. Technology adoption and also the hyper-personalization is going to be a reality, and we are already working on it, and we will be in a position to showcase at least some shade of it in the days to come. Similarly, when it comes to our ability to reach out to all the segments of the customer base, that is something we have that reach, but we are sharpening our distribution capabilities. Of course, I would say that some of it is essentially to ensure that our levers function even more efficiently. That is the major focus which we have. In addition to that, we are now embarking upon the new initiative which is green. And internally we have adopted a resolution that as far as scope 1 and 2 are concerned, we should have significant achievement of scope 1 and 2 by the year 2030, and at least 7.5% of our total loan book should be green advances. That is what we are aiming for, and I'm sure that will actually project the bank and the economy in a very different light across the global scene.
Mr. Khara, if one looks at SBI subsidiaries, either you are number 1 or you are number 2. That's how all your subsidiaries are positioned. SBI Mutual Fund, number 1. SBI Cards, number 1. SBI Life Insurance, almost number 1. Do you think this leadership in your subsidiaries of financial services, are you likely to maintain that? And you think they can be significantly bigger than what they are?
I believe the children should follow what the parent has done. So that's why my expectation from each of them is that they should have at least 23% market share in their respective area.
How much of the profit for SBI consolidated basis is coming from subsidiaries, and in 3 years, how do you see that changing?
It's not much, considering the fact that the way this economy is, a significant proportion is in the banking sector. And though the profits, if at all we will look at it in terms of ROA or ROE, they are doing exceptionally well. But when it comes to absolute number, it's not really much. So of course, when we talk about our this year's profit, which was 61,077 crore, for the yearly profit for the bank only, the subsidiaries contribution was about 5,000 crore. So it is not much. But the more important part is that we are in a position to offer the product manufactured by our group companies to our customers. So what matters most is the quality. And quality of the product is something which will ensure that our relationship should be forever. And I always believe transaction does not lead to relationship. Relationships only generate transactions. So our ambition is to build up relationship in whichever segment we are, so that we should always have the transactions flowing to us.
Mr. Khara, I just saw you speaking to Mr. Prashant Kumar of Yes Bank, and as member of press, when SBI talks to Yes Bank, हम सोचने लग जाते हैं stake sale में कुछ हो रहा है क्या? कहाँ पर है Mr. Kumar? कुछ हो रहा है जी?
No, as far as Prashant is concerned, I only met him here, and we always maintain the arm's length distance with him.
But are you committed?
Yes, of course, we are invested into that, and I only look at the results at the quarterly interval, the way the other investors are looking at it.
So can I dismiss all this buzz which keeps on coming? हम नहीं करते हैं story.
No,
ET now नहीं करता है. ET now story नहीं करता Yes Bank की stake sale का.
Sorry?
ET now story नहीं करता Yes Bank की stake sale का. But can we dismiss it जो दूसरे करते हैं?
No, I think why should I dismiss? Because I'm not even in the know what is happening.
Mr. Khara, so I'd like to draw everyone's attention to your other subsidiaries which are non-listed. One is SBI Mutual Fund or SBI, AMC. It is India's biggest. It's got a EUM which has reached almost 110 lakh crore now. You wanted to take it public about 2.5 years ago, but that plan was put on a back burner because of market conditions. But looking at the size, the reach of SIP and the profitability, is there an inclination which is coming back to take SBI AMC public?
See, actually speaking, the reason for listing could be if at all the company needs capital. They have got a very strong net worth. And why should I unnecessarily expose them to QSQT? They should better focus on the returns which they should generate for their investors.
तो बच्चों को तो बड़ा होना पड़ता है ना सर?
नहीं, वो बड़े हो जाएंगे ना, अपने आप ही हो जाएंगे बाप.
What about UNO? If not 3 in 5 years, you think UNO will go public?
See, UNO is a very important distribution channel for us. So I think we probably cannot think of having a distribution channel being offered through a subsidiary. So I don't think so it's a doable proposition.
Mr. Khara, let's talk about categories. And one of the categories which is of mass interest is the HFC category. And we've seen not a brutal war, but we've seen a war within the public sector banks and the private sector banks when it comes to home loan growth. And SBI has got very aggressive rates there. Where is that end of your portfolio moving? Is that war in the HFC space over?
There is a war, but I'm not part of that. That is something which I can say. We are ensuring that what we are ensuring is a timely delivery. We are ensuring that the customers should get the loan, and also we offer the value add in terms of ensuring the clear visibility of the title, because this is something which is at times it is very opaque. And happy to share with you that we are almost at about 7.6 trillion loan book as far as mortgage loan is concerned, and we don't have LAP. It's pure play mortgage. And we are hoping that we will have a decent growth in this, and we don't see any challenge. When we look at our pipeline for the mortgage, there is no challenge across the country, and we have added to our capacity in terms of the CPCs which we have created. It has rather helped us in improving the turnaround time. So I don't see any challenge, because if at all we offer a quality product at a reasonable price, there is ample demand.
I'm going to keep SBI away from the equation, but if you really have to give us a sense of what is happening in the industry, especially in categories of unsecured loan, in the categories of gold loan, do you think there is a bit of froth building up there?
Well, yes, of course. See, what happened when it comes to unsecured loan, or for that matter, the gold loans also. See, actually, banking is a boring business. So one has to keep on doing the similar kind of thing again and again and again and again. So very often, some people try to resort to innovation. And those innovations were perhaps shortcuts. Shortcut does not work in banking. So ability to repay is absolutely essential. Underlying security, particularly when it comes to gold loan, is absolutely essential. So if at all somebody tries to work out an innovation which will probably have the shortcuts for this, that leads to challenges. And I think RBI could sense it in good time, and they took the necessary remedial steps. At least indicated to the industry, better take the remediations. Otherwise, there could be consequences which may not be in the interest of the financial sector.
I'll also like to draw your attention to what essentially is happening in terms of your global businesses. A lot of banks, in a sense, have consciously reduced the exposure to global businesses. SBI has also done that, but you have a formidable presence. Given that global economy is in a topsy-turvy mode, emerging markets are in a deep recession, how do you see that end of the market, that end of the business moving for SBI?
For us, it is, as of now, it is 12% of our business, of our balance sheet comes from our international operations. And we have an ambition of scaling it up only. Why? Because when India is becoming a global force to reckon, when India is becoming part of the global supply chain, it unfolds the opportunities. That is one. And secondly, we are, as far as our global operations are concerned, at times we are opportunistic also. Depending upon the geographies, depending upon the line of businesses, we are in a position to improve our NIMs in the international operation. And certainly it helps us in terms of our domestic business also, because when we are roping in the overseas investors, even that is something which we can do. So I think for us, we will continue to remain in the geographies where we are, and we are selectively looking at it, the other geographies also where we can expand, where there are opportunities so that is very clearly a focus area for us. And in the medium term, we will like to increase our international banking book from 12 to at least 15%.
A couple of last questions, just 2-3 questions. As a banker, sir, you're in a perfect position to perhaps tell the audience and the viewers that which are the 2 or 3 sectors you think they are on the cusp of strong growth. Last time, for example, I met you, you specifically said solar, renewable, manufacturing. So as a banker for next 3 to 5 years, where do you think demand at the corporate end is strong, and you're happy to lend looking at the dynamics of the sector?
No, I think I still maintain that renewable, solar in particular, will continue to be a very, very promising sunrise sector. And also the infrastructure, and which will lead to decent demand for the cement and steel. That will remain a very, very important sector for the economy in the days to come. And of course now, with the kind of focus which is there on manufacturing and becoming part of the global supply chain, even white goods and engineering goods are also assuming significance.
Last year, SBI's profit was higher than many of the IT and many of the FMCG companies put together. इस साल किसको beat करने वाले हो आप?
I don't plan for anything, so I only plan for actions. Outcome is the result of the actions.
Sir, with all due respect, no plans after August?
When the time will come, I'll unfold my plans also.
We coined a phrase in one of the interviews, and I said, who says elephants cannot dance? You said, why SBI is not ready to get for a tango and a salsa. So what should shareholders expect now that you think the SBI is ready to do a tango and a salsa?
Yeah, I think we have got, our muscles are strong enough, we can do anything.
Guys, that's SBI chairman for you. I mean, it is absolutely incredible the way SBI has crafted its own course, from complete stress in the COVID to the kind of recovery what they've done, the stock at an all-time high, Market cap is something which is a clear indication of how markets are now really endorsing what good work SBI are doing. So Mr. Khara, it's been an absolute pleasure personally for me to interact with you, see how you've navigated SBI and how you've navigated the banking sector in what could be called the extraordinary COVID times. Thank you very much, and thank you for joining us.
Thank you very much, Nikhil.
Thank you so much, gentlemen, for your invaluable experiences. And do remember to join us on social media. The hashtag is etnow Leadership Dialogues.
And over to the next part. Thank you, gentlemen, for joining us. Mr. Khara, it's such a pleasure having you here at the etnow Leadership Dialogues 2024. And now, moving on to decode for us what makes Indian stock markets unique and resilient, we have with us the authority, also known as the father of modern financial derivatives in India. We are here and very proud to have with us someone very special as part of the National Stock Exchange, don't we?
Absolutely. Considered one of the most foremost experts, in fact, in financial market policies. I'm talking about none other than the Managing Director and CEO of the National Stock Exchange. Ladies and gentlemen, put your hands together for Mr. Ashish Kumar Chauhan. He will be in conversation with Senior Editor etnow, Ajay Sharma. Over to you, gentlemen.
Thank you very much, Awan. Gentlemen, first of all, I'd like to thank all of you out here, not only for this evening, but also for the love and support and all the contribution you have in making our journey for the last 15 years. I know that in almost all of you here have been part of this journey for the last 15 years in some capacity or the other. So a great, a huge thanks from the entire team of etnow for doing that. All right, so man in the hot seat now is Ashish Chauhan, who's the MD and CEO of National Stock Exchange, a technology buff at heart, a very spiritual person as well. He's been guiding us in various capacities. So thank you very much for your support for the last 15 years. Today, of course, the topic of discussion is India at 2030. I'll take a clock back. Everybody knows him from his position at NSE, his days in BSE. But I'm sure not how many of you actually know that he was part of the core team at NSE when NSE was actually being founded. And when NSE was being founded, the market cap of India was 4 lakh crore. Now it's 450 lakh crore. So, sir, thank you very much for seeing all these, the developments which are happening in our market and the shape and size and form and technology, all of that. What are your observations of where we are heading in the next 6 to 8 years?
First, let me congratulate etnow and the entire team for completing a glorious 15 years. It has been a good time for India last 15 years and probably best wishes for next 50. So then having said that, I think in last 30 years since NSE started operations in 1994, in debt market we started in somewhere around June. And in equities, we started in November 1994. So broadly, we are completing 30 years now of operations.
So we're almost at the same age in a way.
Yes. And so what we have seen is nobody had given India a chance then. And nobody had given, of course, NSE a chance. But both have kind of done so well that 4 lakh crore of market capitalization has now become 430 lakh crores, that is 4.3 crore, more than 110 times. And that's a pretty sort of significant jump. Even in dollar terms, it has been probably 50, 60 times. And many times I say that America needed a Warren Buffett, India needed a Nifty, right? So in some ways, if you had invested in Nifty then in 94, 95, you would have done better than probably Warren Buffett in dollar terms also. And that I think in some ways that when you look back at the past, you can't predict the future based on the past, but you can make your own judgments on what has happened. One of the larger reasons why India did so well is because of the services. I think Governor RBI also pointed out that it's a recent phenomenon. But for me, NSE was also the mother of IT in India. It was the first large IT project that actually got completed and was used by public. And literally every IT company of India used to bring their customers, potential customers to NSE to show that India can do that. That's how Y2K came and stuff like that. Why I'm telling you this is because if India, like today, I was reading even while sitting there, that Goldman Sachs has said India's services exports will grow to $800 billion by 2030. And if that is so, then you are actually going to be in a reasonably good current account position. Today, you are still 1% deficit. You are going to be slightly or even large positive going forward if you continue to be on that territory where the services keeps on growing. And that has been the story of last 30 years. We were always perennially short of capital. Yeah. We were perennially short of foreign exchange. And today, after 30 years of NSE, NSE being there, not necessarily because of NSE, but after 30 years of NSE being there, you can see India has gone into a different trajectory. And the technology actually makes the world change. The wealth gets created by technology and faster. The last 30 years have been a trailer. Next 6 years or next 30 years will be actually where the action will be. And India is at the forefront. In many of my lectures, I say that in last 2,000 years when technology race was being run, India was not even in the stadium. Today, we are at the forefront. And next 6 years are going to be humongously different for India. Many people think that AI is going to hurt Indian services. Actually, is going to increase the number of jobs many times. Because each time a new technology comes, like when I joined bank, IDBI Bank, in those days, IDBI it was, people actually went on strike saying that the computers will take away our jobs. And today, after all automation, there are 10 times more or 20 times more people working in Indian banks than those days. Right. So each time a new technology comes, it's just that the older people who have not learned newer technology might become obsolete, right. But the newer people are going to get newer jobs. That's why for me, my hope is that next 6 years are going to be phenomenal for India. Of course, the infrastructure is getting built, but the soft infrastructure which we are working on is going to be, again, helping us create that wealth.
In fact, you have told us earlier, I remember, that when we were throwing stones at each other, bow and arrow was technology. So technology actually improves efficiency and expands the market. Technology in our space also has expanded the market from the COVID lows. The amount of addition we've seen in retail investors, HNIs in our country and growing, and that is not stopping. Where do you see role of technology in expanding the market and also making it deeper? Because now we are seeing $1 billion, $2 billion here and there. Many times we see cash flows 20, 30,000 crore and the market doesn't even wink.
Again, when NSE started, we had probably give and take 20 lakh investors. It is like Birbal's crows, you know. Nobody knew how many investors were that, but give it 20 lakh. Today, 10 crore PAN number unique investors. It's not a survey. It's not a guesstimate. It's exactly, I can tell you exactly how many number of investors. We are at probably all the PIN codes in India except probably around 30 PIN codes or so. And most of them are actually airports where nobody stays full time. Effectively, we have reached out to the entire country. Now, having said that, 10 crore investors is actually 7.5 crore households. 7.5 crore households is actually 20% of India's total households. India has become rich enough in those 20% households that they have not only got income, but they have savings. And not only savings, which they put in banks, but now they have graduated into the markets. And this is direct investments. If you take through the mutual funds, EPFO, and NPS and everything else, it could be probably 20 crores or 25 crore people who are directly or indirectly exposed to the equity market risk, right? And it's a phenomenal achievement of India. What I say is that what we have done, I mean, economic theory tells us that a country having per capita poor income, like we are still below $3,000 per capita, such countries cannot have a well-functioning capital markets because poor people don't save, and even if they save, they don't invest in their brother's company. How will they invest in an entrepreneur sitting in some other place? You know, today, a person sitting in Dibrugarh or Jorhat or Srinagar is putting her hard-earned 1,000 rupees into a company in Salem. she's never going to visit, but she has a complete confidence in that entrepreneur that he will not only use that money well, but also when the profit comes, will not siphon it away, will give her some dividend. And she has complete confidence, of course, in India's parliament, in judiciary, in regulators, ministry, exchanges, but more importantly, that investment is being made on the name, on hard work of the entrepreneur. So for I say that India has become very trusting of its entrepreneurs, and it's a great leap of faith, I can tell you that.
Right.
Poor countries are not supposed to have that. There are books written. I have them, many of them on my mobile also. I read books in mobile. But most economic theories suggest that such a country cannot have. And we are today fourth largest by market cap. After America, China and Japan, fourth largest in market cap. If we were a country as a 10 crore investor, we will be like 15th largest country or so. And so on and so forth. Why I'm telling you this is a phenomenal achievement of trust. Creating trust in people via mutual funds, via NPS, via EPFO, via direct, it doesn't happen in most economies, right? And that's the, what I call, a beautiful part of India, that it has become very trustful of its entrepreneurs and also its overall system. But it's going to take us far because the next wave of wealth is not going to require too much capital. I call it capitalism without capital or capitalism with very little capital. Earlier, if you have to make a lot of money, you have to put in a lot of money in factories and all.
Sure.
Today, you have to make a lot of money, you have to put in a little bit of money, and then
the wave
it may take up, like we have seen examples of Infosys or Wipro and so on and so forth, right? And that has created a number of literally thousands of people wanting to do that. And sometimes you feel that every trespasser is getting funded by PE and VC. In fact, my estimate is that out of 10,000 startups, probably 5 get funded, 9,995 have to struggle and most of them close down. But if they come to markets, small companies are also able to raise funds. In last 12 years since the SME market started, I think 970 companies have raised around 15,000 crore. And today their market capitalization is close to 2.75 lakh crore, right? So effectively, the small little guys are going to create great wealth because some of them will literally take off. And if they remain disciplined from beginning, because the market brings that discipline of transparency, they will actually grow faster.
Ashishji, tell us about, is this wealth effect actually being witnessed across the country, or is it concentrated still like it were some years back in Ahmedabad, Bombay, the bigger cities and very financially savvy cities? Because you do share data, the footprint of the market, not only the depth, the numbers, but is it witnessing a massive broad basing of ownership of Indian
Absolutely. Yeah, for me, as I told you, they're in almost all PIN codes. And this is not because government has forced it on somebody. This is not Jantar Aadhar Mobile. This is out of volition of people, out of their own action. They have to actually work hard to become an investor, right? And so I was recently speaking at Uttarakhand, and I thought Uttarakhand is a hilly area. Very few places are sort of approachable, and they would probably have lesser number of investors. But literally, they have almost 9 to 10% of the population registered with us with their PAN numbers. Now, that is a revelation because similar numbers are there in Gujarat or Maharashtra or other places. UP recently became larger in terms of the number of people getting added. But today, now it has become, after Maharashtra, second largest in terms of the overall number of investors and so on and so forth. So why I'm telling you this is that equities market are here to stay. And they are getting accepted by everyone, thanks largely due to the mobile technology, that it's allowing people to come in faster and also check that whatever their wealth is through mutual funds, because we also distribute mutual funds. So in some way, I always tell people that don't overtrade, don't trade day-to-day basis, even if they watch TV.
But do they listen to you? The numbers say that they don't listen.
No, they do. It's just that we want to pretend they don't.
No, but the gamification of equity which started from the COVID lows to now the volume which we are seeing in F&O side, what are your thoughts on it? The governor
I'll
also
tell you
mentioned
this,
towards it.
Many people have not gone through those numbers, because 30 years of NSE. In the best of times, we have, I think, some of the veterans who used to go on floor Two of them I can see.
Right here.
Right? And ask them, best of times, Harshad Mehta's situation, which was like still for many of us, was like the highest of high in terms of speculative fervor. 10,000 trades a day.
We are nowhere near, right?
No, never. I mean, it's...
Not even close.
Yeah. So 10,000 trades a day used to be there, okay? Max 10,000 trades a day. Just to settle them, to even figure out whether actually that trade happened or not, used to take us 30 days. To settle, just between the trader saying, you sold 100, I bought 100. Otherwise, that guy will say, no, I sold only 100, while as it is 1,000 and stuff like that. So from there, within a year, when NSE started taking off, 11 months, we were doing 1 lakh transactions a day. From 10,000 to 1 lakh, people used to tell me that this is speculative fervor. In fact, great Mr. M.G. Damani used to be saying that you are now automated and this is becoming basically over trading. Why I'm telling you this, automation allows you to do things faster. That doesn't mean it is adding risk. See, risk is at 2 layers. It is at the systemic layer and at the individual layer. At systemic level, the total outstanding open positions on India's derivatives market is around 19 lakh crore as of date. The total marginable positions, that is, if you take delta hedging and other things, because derivatives are very complex, you buy the one stuff and then sell in the same month or same week another series. So if you take the total margins, is around 1.9 lakh crore. Today, NSE's clearinghouse has 7.5 lakh crore as the margin money available, collateral available. Okay. So systemically, there is no issue. Individually, yes, people may actually do things, and that's why some of the riskiest instruments like derivatives, small investors should stay away. Sure. And they should be kept away so that it doesn't bring basically a situation where small investors can get hurt. And that is, it's exactly like what you don't give knife to a child at home, right? Knife is a useful activity,
so
useful instrument.
If you know for a novice trader is actually handing over a knife to a child, so it can get hurt.
And for me, it's better they go through mutual funds. At least if they want to study hard, they can do direct investments into equities. But society has to take that call that do we want to allow this or you want to do something else?
Right. This entire investment renaissance which is happening in our country, and retail investors are latching onto it like never before. NSE has been the big beneficiary as well. We saw your latest numbers. Many of your, the audience I know many of them are your shareholders as well at the NSE. And there's a special request from their side to ask you, when is the listing happening? How is the progress on that? Because on the unlisted side, we keep on seeing almost 6,000 rupees now in a matter of, it has more than doubled. So give us some, some thoughts to think about how's the progress on listing.
No, I don't have any comments on listing.
Okay.
But the way we look at it is our main job is to act as a frontline regulator.
Sure.
We also provide service, so we make profits. But that is a byproduct of a job well done.
Well done.
Right? If we miss out on the regulatory framework, that profit has no relevance. Of course, profit is for the shareholders.
Yeah.
They own it. And employees have no right over it. So people may think that the CEO may be getting great bonus. We don't. But effectively, for us, our job is to be the most compliant exchange in the country and continue to help India create wealth. Help in wealth creation of the country. And if country continues to benefit out of our activities of regulatory type, they will continue to reward our shareholders with some profits. But profit in our kind of a situation where we are frontline regulators cannot be the main purpose.
Sure.
Unlike even a bank or a PSU bank has a profit as purpose. Ours is regulation as purpose.
Okay, before I let you go, just one quick word. You travel across the world very often. You were recently in Japan launching indices for Nifty, over there for investors. Though FIs have been big sellers and retailers have kind of bought them out completely, your interaction with global retailers, global big funds, is India actually coming on their radar as an asset class in its own right?
No, it is. I mean, India is exciting. They don't know how to come. They think it's still, they have to get involved by putting in some money. They are trying to go through fund of funds and other things. And so people have started now, in a way, wetting their feet. But India is exciting. There is no doubt across the world. Wherever you go or whoever comes here, this is, in some ways, India is making more waves and largely on its own strength.
Merit.
Because although foreign money has not come in a big way in last few years, but India on its own is doing great in terms of the growth, in terms of the market capitalization, in terms of doing things which the world world cannot do, like UPI or
like that.
other things, which they are like very amused in a way that how come a rich country like
Is
Japan
achieving this.
is not able to have their people actually use mobile technology to transact or to do governance, whereas India is able to do it. So it's a kind of a conundrum that's still trying to resolve. But one thing is sure, there has been a huge upside in interest for India, and naturally the infrastructure that is growing now with leaps and bounds, I'm sure.
So by 2030, I've got just 30 seconds to ask you this. You expect this structural move of towards financial assets from retail, the retailization of market to continue, or do you see some hiccups there?
See, I say that the people are becoming richer, although we may sometimes, our commentators may not want to believe because they have a politically different ideology. But India is actually becoming richer even at the lowest level. And that money is going to come and get invested within India most times. And today they've found the stock markets. Because they are easy, liquid, on mobile you can do things. And that's where, for me, there is going to be more and more retail people coming into the market. And it's a good for the country,
Right.
where they are able to participate in capital formation, invest in companies, same companies create jobs.
Sure.
So it's like you are creating a virtuous cycle of investing in those companies from the employees,
And then
they create jobs, and then those new employees come, and then they put in the money in the equity. So we are creating a good virtuous cycle, and we are growing at our own capital. Of course, we are able to, if we are able to get capital from abroad, we will be able to accelerate our growth faster. But
that will be icing on the cake.
Absolutely.
But the big headline coming from Ashish Chauhanji is that the structural move of financial assets is going to continue. Retail investors are not buckling down anytime soon. So I've answered one part of the question. The next part of the question, what to buy, I shall take the action forward later with some of the biggies of the market. Thank you very much.
Thank you
Thank you
so
very much,
very
sir, for
much,
joining us
Mr. Chauhan. In America needs a Warren Buffett, but India needs the Nifty. I'm sure you said that, and everyone will certainly agree. All right, now before we move right on, this is something very special that we've actually got, Vikram. It's a message, a special message for the entire etnow team that's gathered here. Any guesses?
Well, yes, actually. For one reason, because I'm seeing the name right up front. And it is special because it comes from a union minister. We're talking about Mr. Piyush Goyal, the Minister of Commerce and Industry. He sent us a very special message on etnow completing 15 years. Let's just see this.
Good afternoon, ladies and gentlemen. I congratulate etnow on successfully completing a remarkable journey of 15 years. It is testament to your commitment for excellence in financial journalism and the urge to empower investors. Over the past decade, Prime Minister Narendra Modi's focus on good governance has ushered in a wave of development across the country. Today, India has moved from a fragile 5 economy to amongst the top 5 economies of the world. All of this happened despite global turmoil, our once-in-a-lifetime COVID pandemic, 2 wars, and the Red Sea crisis. With 7.8% economic growth of the GDP in the year 2023, India's growth is towering over other G20 nations. Friends, the people of India have once again reposed faith and trust in Prime Minister Narendra Modi and given him a historic third term in office as the Honorable Prime Minister to continue building on this strong foundation that the economy today enjoys, the strong macroeconomic fundamentals, and the growing aspirations of 1.4 billion people. Trust that the world has on Indian businesses, on Indian government, and the growing role of India in global value chains will hold the nation in good stead as we continue on our journey to be the fastest growing large economy of the world. As the Honorable Prime Minister says, Sankalp plus Parishram will result in Siddhi. Our collective efforts, our commitment to make India a developed nation by 2047 will surely result in a growing economy, a prosperous India meeting the aspirations and desires of our young men and women, and through the collective effort of 1.4 billion people, ensuring a bright future for the nation. I'm grateful to ET Now for having given me this opportunity to engage with you. Thank you very much, ladies and gentlemen, and may you have a very successful conference. Thank you.
The Minister of Commerce and Industry, Shri Piyush Goyal, speaking to us. And yes, this journey that we've made of 15 years to get lauded by Mr. Goyal and being part of this entire journey of development of Viksit Bharat, the vision that has been expressed, and hopefully there will be a lot of continuity over the reforms process as well. We are watching all that happens on that count, aren't we?
Yes, indeed. Speaking of journeys, the Indian stock market on the 21st of May this year reached a landmark after it surged to a market capitalization of $5 trillion for the first time ever. It took less than 6 months. It defied all predictions of the FIIs pulling out ahead of the general elections.
In fact, this journey as well, from 4 trillion on the 29th of November 2023 to now 5 trillion for the 21st of May, has taken less than 6 months, and that really is the story. And we will hope that this keeps going on. At this point in time, how exactly is this growth going to happen? India is slated to remain the favorite among many emerging market investors globally and poised to become the third largest economy, as we keep saying, by the year 2027.
All right, our next panel discussion, Paanch se Das, riding India's market cap journey from $5 to $10 trillion. And for this, we have our national editor for ET Now, Aisha Faridi, who will be taking the stage. And joining her is going to be none other than the senior partner and CEO at Rare Enterprises and the co-founder and mentor of the Trust Group. He has risen to the top of his game, needs absolutely no introduction. Welcome on stage, ladies and gentlemen, Mr. Utpal Sheth. And our next speaker is the perfect insider for the know-how of the market, and I'm talking about the director at Enam Holdings, Manish Chokhani. Ladies and gentlemen, a round of applause for this power-packed panel. Over to you, Aisha.
So today, like Mr. Ashish Chauhan just said, that we have two veteran speakers here with me. That's Mr. Utpal Sheth and Mr. Manish Chokhani. You must have seen them on ET Now very, very often. But thank you, both of you, for being part of our 15-year celebrations. Couldn't have asked for more.
Many congrats. That's a privilege. Thank you.
Thank you so much. Yeah, Manish, you were saying.
No, many congratulations.
Thank
Been
you
a
so much.
Fabulous journey.
But like Mr. Chauhan was calling you both veterans, and I'm not going to ask you how old you are because I don't want the question to be asked to me back. But you guys have seen the equity market journey being pretty much born in equity market families. It's in your DNA, right? I mean, if someone were to take their blood test, it wouldn't be A positive or B positive or O. It would be Sensex, Nifty, and now Smiths. how does it feel tracking the journey for India equity markets from back then in the bull ring at the BSE to now the fourth largest in terms of market cap, Utpal?
You know, there's this interesting Hindi song. It says, "यूं तो हमने लाख हंसी देखे हैं, पर तुमसा नहीं देखा." I think one can say that about this bull market. And, you know, while people talk about returns in a bull market, I think what is most amazing about this bull market is the consistency and the resilience of this bull market. I think we've had 49 months without a 5% dip in the market, in any month. This is the first time it has happened. Both Manish and I have been in the markets now for more than 30 years, and we haven't seen that. Manish.
But at the same time, Manish, you know, I always remember your quote when I remember the first week of June. What happened on 3rd June, 4th, and to where we are now. When 3rd June, the markets reacted to the exit polls, cheered up 3.5% on the index. 4th June, sorry for the bad recap, but it's almost like a motion picture in my head. And then 4th June, you had that 7% tank, and now we're at an all-time high. So, you know, your quote from Lenin, there are decades when nothing happens, and there are weeks when decades happen. How does it feel?
So, as Utpal also said rightly, that this first time the power of retail, which we are seeing in India, is something we've been waiting for literally 30 years. And just to put in context, as Ashish was also saying earlier, if we are a $4 trillion economy and we save about 25%, our saving rate is $1 trillion a year. And even with the amount the retail is holding today, it's whatever, 7-8% of the 5 trillion, it's a $400 billion number, which is less than 1 year of their saving. So it's a 10% allocation at best to equities, which has still come. And for a country which has an average age of 27, 28, you would expect the allocation over time of saving will become 70%. That's the journey countries like US and UK and all, when they were growing, went through. We'll see this happening. Having said that, I just want to put a note of caution there that you pay a very high price for a cheery consensus. And right now, from the RBI Governor to the government, to the investors, to the retail, everyone sees only clear blue skies. And as he said, 49 months without a correction feels great. But to be an investor, you don't get fixed income returns every month in the stock market, which people seem to be getting used to. So at some level, you wish people know what is the difference between risk and reward, because right now we are only seeing rewards. So not wanting to, you know, puncture the happiness index the right party. Now, but let's keep that also back of our mind.
Okay, I'll give you enough opportunity to play bad cop, but talking about, you know, the good that we're at, the kind of, you know, optimism that you heard in the governor's voice to all the speakers we've had before you. We're at 21 crore SIP inflows on a monthly basis. We're already the 4th largest market cap, you know, equity markets. We already know the number of demat accounts, which are ranging from anywhere between 8 crore to 15 odd crores right now. Yet the depth is still not there. We're growing, but we have so much potential to go to what US or China and Japan have been, the economies which are doing, or rather the equity markets which have done better than us. Utpal, what are we staring at in the next 15 years? The demographics that Manish talked about, what could it blow up to?
Before we talk about the next 15 years, let's deconstruct this bull market. The index going up is typically EPS multiplied by PE. So there has been a dramatic increase in the PE. One can take that as a sign of froth, or one can try to look underneath and see what is the structural change that we are looking at. Structurally, I think 4 or 5 things have happened, apart from all the other things that you mentioned. One, the interest rate differential between India and the US is now much lesser than what it used to be. The second is that the forward rupee depreciation rate is lower. Third, volatility of exchange rates and interest rates is structurally lower. Fifth, I would say that
the banking system is the strongest that we've ever seen. And so on. I can go on. So what this reflects is a structural reduction in risk. And it is that structural reduction in risk and vulnerability of the system that is driving the re-rating of the Ps. With that as the context, when we are talking about the next 15 years, I think the next 15 years will have to be driven by earnings growth rather than continued P multiple expansions. As Manish was explaining to you today, a very large, probably the highest number of companies are now quoting at more than 50 times trailing 12-month earnings that we've ever seen in our lifetime. Having said that, the conditions for future earnings growth is dramatically different. One of my pet theories is terminal value investing. And instead of applying that to a company, if we are to apply that to India and say what is the terminal value of India, then I think one comes up with very interesting possibilities. Okay, our manufacturing potential, or the per capita income changing, or as they talked about, financial deepening in the economy. I think we are getting to a point where the confluence of all of these factors is giving us the outcomes which we have not earlier imagined. So I would say that India is an idea whose time has come. And in the previous conversation, one of your colleagues asked the question, is India an asset class by itself? And I would say that we are well on our way to being an asset class by ourselves. Amongst all emerging markets, there is no other market which can absorb that quantum of capital that India can and still deliver the kind of ROEs. If you compare Indian ROEs with other emerging markets, you will find that Indian ROEs are significantly superior. So we've got all the key drivers. We've got growth, we've got ROEs, and we've got capacity.
But Manish, for now, are all the positives in the price?
Well, a lot of it is, but like I've been talking with you earlier as well, it's been a rotational bull market. So it's not like everything has participated at the same time. So as one sector goes up, something else doesn't perform, and then it rotates into that. And we are playing a classical, what I call emerging market growth paradigm, which I saw in the 70s when the world got excited when it was the rise of Japan and Taiwan. It did happen. Then in the 2000 to 2010 decade, it was really the rise of BRICS led by China, where again it happened. And I've seen from the 70s when the gold standard and Bretton Woods came into being, we've alternated every decade between growth and then hard assets. So if you go back to 70s, you saw the rise of gold and silver and the famous Hunt brothers, the peaking of oil. Then it went into Japan and Taiwan in the 80s. In the 90s, it went back into NASDAQ. And the 2000 to 2010, it came back to BRICS. And actually, India, China did nothing for 2010 to 20. Our returns weren't great, despite all the things we can say about it. And it went back to NASDAQ. And this decade, again, in theory, belongs to commodities and emerging markets like India. And we will rise inevitably. And I do think conditions are ripe for India to be the center of that vertical rise in this decade. Having said that, all I want to caution is you don't anticipate a bubble and then buy on that basis. You can get lucky and participate, like it happened with technology, that you participated in the technology boom through the Infosys and Wipros, and they went vertical. But when prices went to a level which couldn't sustain, while the companies continued performing post-2001, the stock prices went nowhere for 10 years. And that's the risk we run into if we create bubbles. Which is why when the RBI Governor talks of caution and monitoring and not allowing exuberance,
The Ferrari.
it's similar to when earlier Hero Honda came to India or Bajaj Auto scooters used to have a waiting list. People would put booking amounts down. Same thing happened when real estate was going through a cycle in 2000. People were putting that 90-10 schemes to book the flats. Currently, we are doing that with stocks. With the derivative market is 400 times of the underlying cash market. So we can't be creating how do I say, a sustainable bull market on the basis of that. We definitely have all the fundamentals in place, as Utpal rightly points out. And the income curve of India is certainly suggestive of that. And again, just to give you that same math again, why we should remain bullish, while I'm giving you caution on prices, the reasons to remain bullish are fantastic. We still have only 7% car ownership in India, of which 90% is Maruti and Hyundai. That category, which elsewhere in the world you don't really classify them as cars, they are called one-box cars. If you double it from there, at some 15 or 16% people own washing machines, which is again not a great number. Air conditioning in a hot country is even less than that. So you can see what kind of growth lies ahead of them. Then you double and you go to up the income curve. Only a third of Indian homes have refrigerators at 33%. And then you go even higher, 50% have two-wheelers. So aspirationally, everyone wants this. But the reality of life is 0.3% of India, less than 500 million people, pay 80% of India's income tax. That's the Taj Mahal hotel, consumer, which, will, and every scooter owner also eventually wants to go to Taj. So the potential for earning growth for, like he says, terminal value for the country is enormous. And the acceleration you see in demand, because the income curve is so steep, is very dramatic. So this wealth effect, as it kind of gathers velocity, one would expect to see a lot of acceleration in earnings, which so far we are not seeing. If people argue that the banking sector can only grow at 15%, it tells you what can be the top line growth for companies. The country's central bank is still guiding you for 7.5% growth. With 4% inflation, that's 11.5%, 12% nominal. The better companies will do 15. Earnings will be 15 to 20. The prices are 50 multiple. That's the dilemma today, that you need that sort of earning acceleration to come. And where we see that, for example, retail or EMS are comfortably growing at 50% for the next few years. No one's going to get off that train, because as long as the momentum's there, there's no reason to get down. But some others which are very deeply cyclical, let's just take defense as an example. Maybe defense is fantastic, but 45 multiple, 50 multiple, and the delivery record of a lot of these companies hasn't been great. What happens if there's disappointment over there? So is just keep that balance in mind is all I'd like to submit.
But Manish, that what happens no one can predict. That's the out of the box moment. You see a company, you see growth, and I mean, who's to say 10 years from now? I mean, does valuation and the historical multiples...
No, you said the best thing. 10 years from now, if you have holding capacity, you shouldn't be selling anything good that you own. That is the secret of the wealth of Titan or Infosys or whatever.
But I'm even talking about buying something. I mean, should valuation for a country which is growing like India and for the equity markets which have the potential that they do, and I would still say that we're at a nascent bull market right now. There is, decades to go and humongous more growth to come in. Why should I look at multiples?
So again, Utpal come in as well. For 35 years we are invested. We've made fantastic returns, but it hasn't been you buy the same stock and sit on it for 30 years. There are one or two, even the best examples in the 90s, Sunil will remember Hindustan Lever used to be in 1998, a 3,000 rupee stock, adjusted 300. And it didn't perform for 10 years after that. It's Hindustan Lever. Every Indian uses it, whether there's a up cycle, down cycle, economic cycle, whatever. Same thing happens to a Infosys or a Wipro in 2001. The stock doesn't perform for 10 years. In the 2008 upcycle, the Reliances and the Vedantas were leading the bull market. They didn't perform for 10 years. They eventually quadrupled. In 21 onwards, Reliance quadrupled, but for 2009 to 2020, it gave you no return. The same thing's happening now, that in the previous cycle, we were all buying retail banks, so the HDFC Bank and Kotak Bank. And HDFC Bank was equal to the market cap of the entire PSU pack. Today, the shoe's on the other foot. You want to own the so-called corporate banks, which is SBI, ICICI, Axis, which were the hated banks of the last cycle, and the PSU banks. They've gone from a profit of 30,000 crores to close to 2 lakh crores. That's the rate of change in PSU banks. And they're still, I would submit, at book value or 6 or 7 multiples, whereas the defense stocks are on 45. So we're paying a lot for anticipation and not for something which is delivered. You get these dichotomies sometimes, and those become the opportunities. So while I agree that this country has a great future, I'm completely with him on board. We guys are always 100% invested, but it's not always the same horses we go through every cycle.
But in your scheme of things, Utpal, because you really look at the long-term horizon, how important is valuation and the price that you pay for a stock as a criteria?
Valuation is surely important. That valuation has to be seen in the context of that terminal value. But just to support some of the points that Manish was making, our market cap to GDP now is a little over 1.4x. The last time that we were a little over 1.4x was in 2007. Okay? But at the same time, USA today is 1.9x. Okay? Does not mean that we have earned the right to be 1.9x. For sure not. Okay? So there is definitely overexcitement in some parts of the market. But overall, if you see the earnings trajectory, I've never seen Indian corporate sector to be more confident of their earnings trajectory than now. Okay? And clearly the reduction of risk, or rather reduction of systematic risk or vulnerability of financial markets has gone down. I think the supply response is what is most required, in the sense that even now, the total quantum of paper being issued in the financial markets in the context of our market cap is very, very low. We've gone through a large corporate deleveraging cycle. We will see larger issues coming up, like we are seeing Hyundai coming up.
Ola, yeah.
Ola coming up. So these are larger size issuances. As we see more and more larger sized issuances, we will see more sanity returning to the valuations.
But Manish, valuations is one thing, and like you said, horses remain the same, the courses are going to change. In the next 5 years, do you buy more of the same that you're buying right now, which is, XIT and right now FMCG, the pure play companies?
No, like I said, cyclically, you would expect emerging market commodities to be the trade of this decade. And in that, again, to supplement Utpal's point, normally you would expect great supply response. What I find, though, yet in India is we are still playing yesterday's game. So whether it's to do with our currency or our policies or the way the corporate sector wants to spend, if we are the third largest economy in a few years, this currency cannot remain the way it is. It is a store of value. If we are the leaders of the global south, why on earth are people holding currencies which they know are getting debased and printed every day? It's like someone's taking out a rights issue and you're still pegging your price to the X rights price of that currency. So that needs to change. So that's, at a very macro level. At a governmental level also, if, like the Prime Minister said, we want to go faster. If you want to create 10 million jobs a year, you need 10% dollar rate growth, which is a 14-15% nominal. We're currently happy with 11% type nominal. So that 3% extra delta can give you staggering amount of growth. So some of these things need to change. The corporate sector is so burnt with the last decade of deleveraging that we still haven't said, let's go to 0.5 debt to equity, 1:1 debt to equity. If we make a $200 billion sort of profit after tax for the corporate sector listed, the demand for new investments is not coming from corporates to SBI and the others as yet. We are still investing 25-30% of GDP, but the bulk of it is going to real estate. So if my central bank, my government and my corporate sector is not ready to grow faster, that earning growth which we are all expecting is currently not looking like it's going to be as great as one is expecting. Also, if you're going to go from number 5 to number 3, there's no country which has done it only on the back of being a processor for somebody else. So you will see a lot of Taj hotels will proliferate all over the world. The JLR car will proliferate all over the world. Indian brands have to carry and go all over the world. The way you see the Samsungs when Korea went up or when Japan went up, you saw Sony and Toyota. Or you're seeing with the Chinese today. So if that sort of productized thinking, and those are the sorts of companies we look for now, that these will be the new big leaders which become platform plays. It's NSE. I don't think anyone could have imagined 10 years ago that NSE would be making this level of profit. The same thing, SBI, chairman was here, he will cross $10 billion of PAT. He'll be at 83,000 crores. He's shy to say it. They are staggering numbers which are coming up. They will cross because our mind used to be blown with the numbers the IT companies were making. But you see what the financials will be doing 2 years from now and what that delta does to, lending power. If the Tata Group is willing to make the bets which they are making today on semiconductors, they are the ones who want to lead EMS. It won't be the current space. So there are things which are coming out and we keep our eyes open. And also, historically in these conditions, the supply response from India, whether it was Reliance or Adani or SBI, the issuances have to be 10 billion plus. Today the foreigners and the Ps are realizing this and they are selling down. The Indian corporate sector has not yet bitten the bullet and said we can raise a lot more money and grow a lot faster. So I think, like RBI Governor said, let's see the pitch is very, very conducive. But if you don't hit the ball for a 6 and you defend thinking last time I got out, that's the Virat Kohli situation today in the T20, right? He's gone to open, he's supposed to whack it, but he's looking at Rohit Sharma that you hit and I'll defend. And so if I think we cross this bridge, the conditions are absolutely ripe for 5 se 10. But how fast we make it, is it in 5 years or 7 years? I think that's really the debate.
Whatever it may be, Utpal, 5 years, 7 years, 10, 15, right? All of us are going to be here and all of us are going to be a participant and a spectator of the Indian equity markets. You always believe, don't bet on the monkeys, bet on the gorillas. I want you to explain that theory to all of our viewers here.
So, I think India has undergone a structural change where there is a shift from the unorganized sector to the organized sector. Within the organized sector, there is a shift from the weaker players to the stronger players. As an investor, one needs to recognize that and participate in that process, which is why the focus on gorillas. What is the fundamental difference between gorillas and other monkeys? 1, gorillas are rare. 2, gorillas are dominant. 3, gorillas have a lifespan which is more than double that of monkeys. Okay, so they have longevity. So companies which demonstrate these characteristics, to our mind, are gorillas. If you do a historical analysis, whether in India or any other good developed capital market, anywhere in the world, you will find that bulk of the incremental value creation in any mega trend or any new sector over many decades is captured by the top 3 or 4 players only. Therefore, it is essential to participate in that. For example, in the 90s, if you had bet on the IT sector, but if you had ended up with a Pentafor software or a Satyam software or a Visualsoft, right, then you were in trouble. So, getting the megatrend right is important, but getting the leadership right is equally important, if not more. And if you get both these right, only then will you participate in the wealth creation process. What is it that determines this leadership characteristic? To my mind, it is intangibles. It is no longer tangibles. The kind of culture that a company has, the kind of institutionalization that a company has, and so on. Therefore, I focus on these 3 markers for me as which are megatrends, leadership characteristics, and intangibles to identify potential future gorillas.
So where is it that you see the future gorillas right now? Let's discuss the megatrends.
Okay. I'll classify megatrends into 3 buckets. One is the well-known megatrends. So what are the well-known or more mature megatrends? Megatrends like consumption and premiumization, or financialization of savings would be long-term megatrends, well known to all of us, or even the digital growth. A few megatrends which are not so well known, like India's female labor force participation rate is actually quite low. If India is to be what we all expect it to be, then our female labor force participation rate has to go from around 30s to around 60s, where China is today. And whether we take 10 years, 15 years, or 20 years, but that needs to happen for India to sustain the GDP growth rate. The percentage of population which is above 60 is 11% today. But this is going to double by 2050 or so. That change of demographics will throw up another set of opportunities. These are the kind of megatrends which are less well known or well appreciated. And there is a third set of megatrends, which is in the technology space. Whether we talk about artificial intelligence, electric vehicles, renewables, recycling, and so on. All of those are technology shifts. So there are many megatrends which are in process. You don't have to participate in all of them. You just have to build your conviction in a few of them and find the leaders in those spaces.
But again, Manish, you know, it's kind of obvious who the leaders are in the spaces that he just talked about. But the prices that they quote at right now, even if you want them in your portfolio, would you be willing to pay that kind of price?
So I was the first guy to talk about caution on prices and what you pay for. But again, just to complete his point of, you know, the 5 big trends which we've been talking for years, which are finally playing out, that as this country's income level inflects up, it was very obvious that consumer discretionary will be great. And that starts with what we're doing with housing. So real estate cycles come back after 15 years. What we're doing to automobiles, then what's happening with home improvement, what's happening with discretionary spend on experiences, you know, tourism. You've seen what's happened to hotel and airline stocks, for example, over here. So this trend is not changing. And like I explained, the income curve is very steep in India. So the operating leverage companies in discretionary space, if you do really have that 5 and 10 year outlook, for some of them, if you draw the number out, the numbers are very staggering. So it's not necessary, and again, Utpal will supplement, that just because it's a high P doesn't mean it won't deliver returns. Because if it keeps delivering the earnings, and therefore it will then sustain that multiple, you can create enormous wealth. But you be damn sure of that earnings and your ability to hold for long term. That's what's defined, whether it was IT in the 90s, it was holding for 10 years which gave it. And that final blast which happened between 98 and 2001 was the real delta. If in 98 I thought Infosys is expensive and I sold it, I missed all the fun in the last 3 years. So that for consumer discretionary is still an opportunity, but multiples are in some cases north of 100. Most of them are 50 to 70. So you must get that level of earning acceleration. It won't happen in FMCG, but it'll happen over there. The second are platform plays, which are all these tech companies. Again, multiples are berserk. But that's really where technology disruption is happening at the margin. Now, whether it's a home delivery guy, or whether it's a B2C brand, or whether it's a e-commerce type site, and so on. So
but is 200 a good price for
Just
Zomato?
I'll quickly wind up. 3 is your financials.
Ignoring my question.
Sorry.
I said, is 200 a good price for Zomato?
I can't comment on individuals, but I'm saying this whole thematic of platform plays where India will productize, and you don't then spend incremental money. So when a consumer company creates brands, and you go from a Tata Tea to Tetley and Starbucks, which is what they're doing successfully, or like they're doing in their hotels, and they're differentiating across the categories, that gives you operating leverage. Or your cumin, people would have not thought of it in the past. So what they're doing is fantastic, and I won't steal their thunder by, So if that's kind of, another big theme, financials, this center point of the country will pass through financials. And it's not just the banks, the wealth management companies, the mutual funds, the stock markets, enough range of things to play there. The fourth one was where you're privatizing. Historically, each time the government vacated a sector, the profit pool came to private sector, and they tended to be natural oligopolies. So it's happened already in telecoms. They vacated telecoms, they vacated airlines, and so on, like they did in the past with banking, or they did with media, and so on and so forth. So all that is also still coming. And fifth, the whole policy push is manufacturing. We want to go from whatever 16% of GDP to 25. So you can expect all the policies to come directionally in favor of whether you're doing semiconductors, your PLI will come for semiconductors, electronics, pharmaceuticals, chemicals. Question is, as he rightly said, who has the guts to say, I will put a world-scale plant, I will beat BASF? Because the opportunity today is ITC's market cap is already bigger than BAT, which was the parent. The entire market cap of Suzuki is represented by the value of its holding in Maruti. The rest of it is free. Even more shocking number I'll give you. If you take out the Bharti Telecom value from Singtel, Singtel is worth zero. That's what the market thinks about it. So the world wants to give us money. We are saying we are not ready to take that money and explode our businesses upwards and grow. And I do submit again, if I was still 10 years ago, I used to be an investment banker, I would be going out and raising tens of billions of dollars for all these large corporates, plus borrowing money left, right, and center from bond markets and the banks, which will allow you to accelerate the earnings which the market's giving you. We missed that opportunity even in IT. Infosys used to be what multiple, Wipro used to be what multiple. They didn't acquire companies at that time to grow. And we went at the end of the cycle in 2007 and we went and bought Chorus and we went and bought, what is the one which Hindalco bought? GLR. At the top of the cycle. The point is, can we do it as corporate India early rather than later? ICICI Bank went and raised huge money, remember, 2007. And then stock didn't go anywhere for that period. So the opportunity is we will get returns if the companies deliver. So the ball is not with the stock markets to take you 5 to 10. The ball is always with the value creators are the companies of India. And they have to see that earning acceleration coming, which is really what both of us are saying.
So Mr. D'Souza and Mr. Chatwal will be very happy if you think that's where the mega trends lie. Is it IHCL and Tata Consumer?
Yes, it is surely a mature mega trend, and they've clearly demonstrated that they are leaders in that space.
Okay, so we'll throw it
I
to
will
the...
say, Aisha,
yeah.
that the only group which is showing a mindset of productization is the Tata Group among the mega.
A huge round of applause.
So, really.
So Manish, I know our time's been up, but can't let you go before you sing 2 lines for us to describe...
That was Vijay Kedia, he's the singer.
He will join in, definitely. I'll make sure he does. To describe India right now, to the way the markets have been, and of course for etnow.
Well, right now, I remember there was a movie called Do Aur Do Panch ki jo soche jo chahe wo karke dikha dein. Hum wo hain jo 2 aur 2 5 bana dein.
Okay, good one at that. Vijay Kedia, would you want to join with a line? No. Okay, later then. Thank you so much, all of you. Thank you, both of you.
Thank you.
All right, getting leadership right along with getting the mega trends right. That's how you can look to create wealth. And we loved hearing as well some of those interesting lines and maybe some musical prowess later on in the evening.
Absolutely. Looking forward to that, Mr. Chokhani, Mr. Sheth and Aisha. Thank you very much for joining us. And yes, it's all coming together, isn't it? I mean, the RBI Governor started talking about demand and how it's growing. Consumption story, something that we were just listening to, the value creators being some of the consumer-facing companies, and we have a conversation around that as well, because yes, a leading hospitality chain getting represented in Mr. Chatwal, and we're looking at the consumer story as revealed in Tata Consumer Products, and Sunil D'Souza is with us.
Absolutely. So we've got our last and final panel, and these are 2 domain companies, and they lead the pack with a very deep understanding of what the consumer wants. All right, so let's welcome on board then the MD and CEO of Indian Hotels Company, Mr. Puneet Chatwal, and we also have the MD and CEO at Tata Consumer Products, Sunil D'Souza, in conversation with Nikunj Dalmia, talking about Indian Consumption Vision 2030.
Over to you, Nikunj.
Mr. Chokhani and Mr. Seth have already said they are the 2 best stocks to buy. तो session तो खत्म. क्या पूछें अब इसके ऊपर?
डेफिनेटली जो
सेशन के बारे में तो मालूम नहीं, पर वो जो बोले थे वो ठीक था. हम वो हैं जो 2 और 2 5 बना दें.
If I look at Tata Group market cap, pecking order, TCS, Tata Steel, then there is Tata Motors. अब आप ट्रेंड के पीछे हो और आप लगता है इनको बीट करने वाले हो, तो 2 और 2 5 में कौन किसको बीट करेगा?
This is actually what my boss, chairman of Tata Sons, does, right?
हमें अंदर की खबर है, इसलिए सवाल पूछा था. हमें अंदर की खबर है, इसलिए सवाल पूछा था.
So, effectively for him, I think from a group perspective, 2 important things. A is for every company in your domain, you've got to be in the top pecking order. And then within companies also, he's got a very clear perspective of who's got it right and why you should accelerate faster right now.
For me, collaboration is inside, competition is outside.
Wonderful. That's the spirit of the Tata Group. Okay, so let's start with calling out 2 or 3 large trends which you see in your sector and 2 or 3 large trends which are small right now and could become big. For example, who would have thought tourism could be a big trend 5 years ago? Who would have thought food as a category could be a big trend 5 years ago? So let's start with calling out big trends. The theme is 2030. So big trends in your sector for next 5 years.
See, one of the biggest trends is that because the nation becomes richer and you move from whatever number 13 to number 5 economy and poised to become number 3, obviously your per capita income will increase, which means the spend in leisure, tourism, will obviously also increase. Also restaurants, dining out, etc. The second trend is the investment of the government in the infrastructure, the 6-lane highways, the renaissance of the train stations, the doubling of the airports, will bring new opportunities for the sector in terms of getting new dots on the map. So it has to come. You cannot have an airport, not have flight kitchen, you cannot have hotels out there, so that part is going to follow. And last not least, it's experience at different price points. Basically, when you become the 5th largest and are going to be the 3rd largest, does not matter at which price point you are, people want to have the feel-good factor. They want to have the feeling of premiumization. And I think that's broadly the 3 big things that I see for us. But there is a 4th one, and that is more related to the valuations. There has been a myth, I think, globally, that scale and number of rooms translates into value creation. And I would rather go with what Mr. Chokhani said just now. People need to understand, especially hotels, is an anti-cyclical investment. You should buy in when the market is reasonable, if not low, and not at the top of the cycle, because the only thing that will happen is it will go down. And if you do some smart investments, they're far more lucrative than a fee-based 5, 6, 7, 8 hotels portfolio. Now, in an ideal world, what we have been doing, you're doing both. You're doing investments which give you the operating leverage, and you're doing also the fee-based, which is giving you the margin expansion. So I think this is one big myth, that scale necessarily means that value is being created. Maybe that journey will be over in the next 18, 24 months.
What are the trends you would like to call out?
So Nikunj, I would say 3 broad things, right? A, as GDP grows and per capita GDP grows, I think you will see the entire consumption pattern changing, and I'll come to that. Number 2, the consumption pattern changing and people where they buy that consumption, I think that is going to change. And number three, what kind of things they are going to buy is going to change. Now, if I elaborate, right? India is what, $2,800 per capita GDP right now. As income grows, right, and per capita GDP grows, disposable income starts to grow. I would say roughly half of that will go to consume more, but half of that will go to consume different things. And those different things, I think you'll see two big pieces coming out. A is discretionary will take off. I think the previous panel alluded to that also. People will not consume more, but first buy the new TV, first buy a two-wheeler, real estate. I think that you will start seeing accelerating before anything else. That's number one. Number two, movement into services, right? Education, health, all those kind of things will start to happen. And then the whole other consumption basket starts to lift. So that's piece number one. Piece number two is where they buy. I think that you're going to see a dramatic shift. India is the land of the kiranas, right? 8, 9, 10 million kiranas, you take anyone's number. Modern trade is still under index. So modern trade and e-commerce will grow. Now, modern trade, obviously, for most FMCG companies, depending on where you are, between 8 to 12% of sales, I think that will keep inching up. But e-commerce, I think, will grow. And I'll tell you the reason why. I mean, a lot of people would say e-commerce may not grow as fast for FMCG. If you look at global numbers, right? India spends about 5 to 6% of retail spends online. Brazil is 15. US is 25. China is 35. 60% of Indians who are online have never transacted on e-commerce online. In the US and China, the number is 20. Normally, there are 4 big factors for e-commerce to take off. A, you need physical reach. If I remember the numbers right, distribution costs have been coming down, logistics. Number 2, you need digital reach. India's cost per gigabyte is already one of the lowest. Number 3, you need financial ecosystems. I think that UPI, fintech is there. The 4th most important factor has yet to kick in. So this story is just about starting off. E-commerce normally tips at $4,000 per capita. When we come there, I think that is when you'll start seeing acceleration on e-commerce. So that's the second piece. The last piece is, Indians are known to be price seekers. I think that whole game is going to change. The whole premiumization story is going to happen. And Indians are going to be value seeking. And I'll say why. My generation, and with all due respect to the panel before me, I think we grew up in an India which was perpetually in recession. You are always scared to spend. Today's generation, which is coming of age, is the generation of liberalization. They have not seen those days, right? When you don't use the same set of clothes all through the school year, don't buy a second one, the same pair of shoes and then put a sole underneath, right? Today's generation is confident, going out, spending on credit, etc., etc. They are very confident to spend. They will not straight away go to premium, but they will look for value. I think this thing of premiumization and price value equation is going to change dramatically.
When you say your generation, is Chatwalsa part of your generation or? Guess his age.
Broadly in the same ballpark.
Oh, guess his age. Anybody can guess Mr. Chatwal's age? A free Taj room.
I look older, no?
No, the simple question is who's guess Mr. Chatwal's age? You celebrated your 35th birthday, right?
Actually, I never celebrated my birthday till the last one, so...
Well, Mr. Chatwal, I mean, apart from getting tips on how to run hospitality sector, hotels and all, he's 60 years, ladies and gentlemen. The fittest 60-year-old I've seen. So a secret to बताइए क्या है वो?
Start your career in a diploma in hotel business. Some fondly call it a diploma in ginger and garlic. They're supposed to be good for your health, if in moderate quantity. And I think it's a lot of work. Hotel business means 24/7, 365 days. Christmas, Diwali, New Year, you're always on the job. And I think that's what keeps you fit. And I think so. Most of our people do look very fit, especially at the Taj.
Okay.
I started my career at the Ashok. There it wasn't the case, but here they do look fit.
My next question is, we've identified 3 or 4 large trends. These are called as mega trends. Now let's look at where the entire competitive landscape would change. If one looks at the sector which you represent, which is the hotel sector, the competitive intensity is suddenly changing. Global chains are talking about setting up new hotels. The sector is growing right now. So up until now, what in a sense was the sector which was on the back burner is now occupying global headline. How do you see the competitive landscape, which is demand and supply in your case, changing for next 3 to 5 years?
See, if you heard Sunil carefully, I think my key takeaway would be that value seeker, I would call it, you kind of live for the now and not put an additional soul in your shoes. It's people are spending more money, and the generational change is a very normal thing. When I was growing up, my parents came from the other side. They used to talk about partition. Now, when we were growing up, we had those middle class insecurities. So, as he said, India was, in recession in perpetuity, or that fear of, even though it was not, that fear was there. Now we are only talking about growth, whether it's 7%, 7.5%, 8%, or we are surprised now last quarter was actually 8 and not 7.5 that everyone estimated. So I think given that, the sector is very well positioned to experience a boom. But the challenge is, if you've been here this entire afternoon, starting from the first important interaction that you had, following with the other, everybody talks about every other sector, and nobody sees the opportunity of tourism when it is the highest multiplicator of jobs. If I remember correctly this morning, wanting to wish you 15th anniversary, and I switched on the TV, and I heard one of the persons say that everything is fine, but the biggest fear is India going to be able to sustain employment for that demographic dividend that it has? And that's where I see a huge opportunity for the sector broadly as tourism, and within that, obviously, hotels. And, it's all the food suppliers, the milk suppliers, the limousine drivers. There's so many, the airport representatives. There are so many touch points in a customer journey that creates jobs. So I think forget that the feel-good factor. It's a need factor. And I think the more we talk about it, the better it is for India and the better it is for the economy. And globally, tourism pre-COVID created more than 10% of the global jobs. And 1 out of every 4 new jobs were created in tourism, and not in fintech or in tech or IT, etc. So I think maybe because of where we are coming from, our background, we feel a bit shy about talking about hotels or restaurants or travel or airlines. We rather complain about, the airline fare is increased. The hotel rates are very high. The same people go to the US, pay $1,000 for a room for 1/3 of the service level, and they don't complain. So obviously the international chains see this as a big opportunity, that they know that one day when India gets to that level, the opportunity to earn is a lot. So everybody is interested, and India's role in the global map is very interesting. So they are obviously interested in having that presence. And having worked for the global majors, I do understand that how they operate, but itna aasan nahi hai. It's India. We can do a better job.
Great to hear that. Okay, Tata Consumer, from being a tea company to diversifying in water, now multiple products from makhana to oil, just about every major unorganized category you are now trying to, focus on. In terms of innovation and in terms of new product category, 3 years from now, how will Tata Consumer be different?
So, Nikunj, overall, the opportunity that India presents, I mean, irrespective of the category that you look at, I mean, forget FMCG. I mean, it was quoted saying the penetration of cars in India, right? Two-wheelers is, if you benchmark Southeast Asia, we're half of them. Tea, the sector, yeah, you called us a tea company, but even in tea, 1/3 of tea is still unbranded. It's still a long way to go. So irrespective of which track you take, there is huge growth opportunity. I would say in two big pieces. One is premiumization is going to be a big focus, and the second is the price value equation, right? So you've got to be very clear when you're crafting your whole product portfolio. You've got to be playing in segments which offer that either the premiumization or the price value equation. Now, if I talk of premiumization very clearly, it has to be brand, it has to be innovation, it has to cater to the health and wellness convenience pieces. So you've got to play those. So we're looking at Tata Tea 1868, which is catering. Yeah, right now it's small, but I think it will grow significantly. We've entered coffee in very, very different formats, including micro lots, including flavored, freeze-dried pods, etc. So one is the premium piece. Second is the price value equation. Now, price value equation again, if you take pulses, if you take makhana, etc., these are broadly commodities, but there is a price value equation to that commodity, and the reason is because as long as you provide differentiated value even within a commodity and put it in a proper brand and build the emotional connect, the consumer is willing to pay. The only thing is you've got to modify your business whole model to make sure that you're able to make money in that segment. Now, that can come with different things. So in commodity spaces, I wouldn't put big capex. I would leverage other co-manufacturing with spare efficiencies, and therefore that's number one. Number two, I would look for where are the inefficiencies and go to the endpoint and therefore start working cost backwards. Number three, freight and logistics is a big thing. So when you look at categories like pulses or basin or water, I mean, freight is a very, very significant. So distributed manufacturing plays a big thing. And lastly, even with across any category when you play, you need to tier this thing. So even at, I mean, whether it's Tata Tea Gold at the highest end or Tata Tea Agni at the lowest end, there is a 10 rupee play. And then there is a 50 gram, 100 gram, there is a 10 rupee. The grammage is different because there is that consumer who always wants that. So across this thing, it will be premium and price value equation categories, categories of scale, and categories where we can create value. And the best part is India, while I said it's a price value play, I think there has been enough demonstrations that even in this market, historically companies have made money. I mean, I think the previous panel alluded to it. Unilever, if I remember right, Hindustan Lever return on assets is about 50% more than the global parent, return on assets, right? Nestle, India's margin is about 40% more than the parent, right? You might call this a low price value market, but there is, if you structure your business models right, there is enormous value to be had.
Okay. Now, you know, Manish Bhaiya is here, so he's a word which he uses always, dhamal hone wala, right? Let's assume that India's GDP doubles by next 6 to 7 years, which is where we are headed. In that kind of a scenario where India's GDP will double, the per capita will go up, binge consumption will move higher, premiumization will go through. What kind of scenario do you forecast and you envisage for Tata Global?
So Tata Consumer, inherently, we want to be among the top players, right? If you look at today, depending on how you classify listed companies, we are between 5 and 7, right? We want to be in the top 2, top 3 companies, and therefore we have to outgrow the industry. Whichever category we are playing in, we want to outgrow the industry and make sure we are creating value at this thing. We'll be a multi-category company, but make sure that we are creating value in everything that we do.
What could happen to Indian hotels if the GDP doubles in 6 to 7 years?
Wow. I think first thing we can proudly say is that today Indian hotels revenue or EBITDA or market cap or whatever variable, number of rooms, number of destinations that we cover is possibly us equal to the others put together. So I think we don't need to wait there for 3 years. I think we are on that roll and we will keep moving in that direction. I think very importantly is how to be fit for future, and how what Mr. Chokhani said was very interesting, and I repeated that already, that I find that it resonates. But how not to make mistakes when you are not having, net debt, when you are, for our, standing, we are cash rich. So how not to make any kind of mistakes will actually make us fitter and position us very strongly to keep diversifying our top line, enhancing our brandscape, maintaining our margins, and a growth journey which we have had. We've added 200 contracts in the last 5 years. The company was, 115 hotels in its first 115 years. And in the last 5-6 years is added 200 of which 90 have opened and the rest is in pipeline. I think this show can go on. It will go on, and I remain optimistic that we are in for a very good run.
So if I say that for next 3 to 5 years, the trend in the hotel industry is not bullish but very bullish. Demand will be more than supply. Pricing power is with the hotel industry, and the kind of recovery what we've seen in terms of margins and other aspects for Indian hotel, it will continue.
I think the guidance that we have given, we stand by it, and that we will open 25 hotels. We'll have a double-digit growth on top line. That we will maintain our margins. All that is there. That is in public domain, that guidance. But more importantly, I think what I said will change is, although we might have learned hoteliering from the West, this might be a game-changing time in 3 years from now, when we might be the leaders of hospitality in the globe, where maybe top of the top 10 brands in the world, maybe 3 come from India. And we would be definitely one of those.
Kya baat hai. Taj is already right up there in terms of a brand survey. I just read it last week.
Yeah, for the audience, I think in the last 4 years, in all sectors in India, Taj has been rated as the strongest brand by Brand Finance, and also as the world's strongest hotel brand. We got it last week for the 3rd time in last 4 years. So I think this is a big change. We were not even among top 50 5-10 years ago. Our increase in brand value, estimated by this most influential brand rating agency, is 45% in a year. So I think that change is happening. It's a huge change. Of course, we were always the Taj, and we always did what we could. But something changed in COVID, as I said. The prices went up in the rest of the world. The service quality went down. The people left the sector because of the way they were treated. If they are treated, the associates, or your people, the way we expect them to treat the guests, maybe this would not have happened. So they left that field for us to play. Or I wanted to call the RBI Governor not as a batsman. I wanted to call him the wicket keeper. So there was no wicket keeper. Whether there is an edge or not an edge, you can just keep scoring runs. If the bat doesn't hit the ball, it goes for 4 byes, right? So this is what has happened in our landscape, and I think it's a great opportunity for India's hotel brands to shine, not just Taj, but for others too.
So nice to hear that. Okay, let's talk about the way you're growing. You've just made acquisitions, and you've done a string of acquisitions. Will that be your growth strategy for next 3 to 5 years, that organically you will grow, but in order to really take that leap forward, you would be acquiring assets?
Yeah, so Nikunj, you publicly said that, right? We've dissected, first of all, we'll be a total FMCG company. Right now, we're focused on food and beverage. We've very, very clearly identified which are the pillars that we're going to play in, whether it is core, pantry, ready to drink, mini meals, snacking, and then a future portfolio. We said we're going to do that. And even in that, we've identified sub-segments. There are sub-segments we know we can do organically. There are sub-segments we know we cannot do organically. So it will have to be inorganic. But inorganic, again, you cannot time it, right? You cannot say that tomorrow I want to do X, Y, Z. There are opportunities on the market which you don't like, and what you like is not on the market. So you've got to be patient about it. We will grow organically and inorganically. Like, again, similar to Puneet's point, I mean, in the last 4 years, Tata Consumer, we've grown top line at about 12 and net profits about 27, right? We aim to continue this momentum, if not accelerate from here on. Combination of both organic and inorganic. And the other thing I would say is, again, going by the previous panel, you see growth on the horizon. You've got to always have a fine balance between top line growth and margins. Yeah, we are behind on margins, we know that, and we need to improve. And we will continue to improve. But when you start to weigh about, will I go after between the two, growth and margin, I need to improve margins, but how much? I would first prioritize growth and then a slight bit of margin improvement rather than fantastic margin improvement and lower growth. Because growth is here today. If I build that scale, to your point, 3 years, 6 years from now when the whole GDP is double, if I'm sitting at a sizable scale, I know I can drive margin from there.
So in next 3 to 5 years, do you have plans and are you consciously working towards making Tata Consumer in the top quartile in the FMCG space, whether it is in terms of market cap or profits or in terms of margins? Are you consciously trying to take the business in that direction?
Oh, yeah. Obviously, when we do our 3-year rolling plans, 3 and 5 year strategic rolling plans, very clearly we are plotting out which are the categories that are not present, and over the next 3 to 5 years we will add it organically, inorganically, what the top line is going to be. And most importantly, you have to create value for shareholders. And those values ultimately is in terms of the P&Ls and the balance sheet. And then the market will reward you in whatever form or manner. I cannot dictate what the market will reward. My job is to make sure, or my team's job is to make sure that we deliver the best possible returns to the shareholders.
As a CEO, I'm going to ask this common question to both of you. What is the importance of market cap? How does it matter in a boardroom? Why are you looking at each other?
So let me put it this way. I would say, again, I'll repeat what I said. Market cap is what the market thinks about you. But that is an output factor. Input factor is what I do to deliver the P&L and the balance sheet. And then the market has to decide what the market cap. It feels good when the market cap goes up, but that's not something you can influence directly. What you can influence directly is day on day, make sure you're selling the right amount, costs under control, delivering the right returns, make sure cash flow is right? After that, it's a derivative market cap.
After such a comprehensive, good answer, what shall I add? I can only say something totally different. It feels good when it goes up, but when it is going down, it feels really bad.
A lot of CEOs told me that when stocks fell, they became very religious. Now stocks have gone up, they become very spiritual. Is it true?
See, I would encourage everybody to be spiritual because we have hotels in 50 plus destinations, totaling 75. In good and in bad times, please try to visit these destinations. They're very nice. And in many places like Tirupati now, we have 2 of them. In Banaras, we already have 2, but we'll soon have 5. In Ayodhya, we have 3 under development. So, whether it's Ajmer or it's Guwahati, many temples. And I think it's a good time because when economies get richer, people should become more spiritual. Fear of losing is higher, right? So please visit those destinations, and I think there is other things to do too. But On a serious note now.
ये serious बात है भाई.
Serious note, I have to say that I was so impressed when I last went to Banaras. I've only been twice. When I went the first time and when I went the second time, the change that I saw in terms of cleanliness, in terms of beautification of the place, I mean the whole experience of going into the Kashi Vishwanath temple or the boat ride or the Ganga Aarti, I mean, I would like to actually thank people who supported this, which is called Ganga Seva Nidhi. Already 25 years ago, there was a general manager at the Taj Ganges in Banaras who started that. I wish I could say I did it, no, but it was someone else. But it's a fascinating experience. I mean, you don't have to follow a religion to enjoy that. It's a world-class event to witness that 1 hour of Aarti on the banks of Ganges.
But if I have to start summarizing our today's interaction, headline number 1, the sectors which you represent, you think demand is going to outstrip supply in the hotel industry. In the categories which you represent, you are confident of growing higher than what the industry average is. You think we are at the cusp of what could be called as a multi-year consumption boom. There is premiumization which would be applying in both food as a category and hotels as a large category. And in terms of the equation, you don't see too many pitfalls barring some global shocks. So the consumer is young, consumer is hungry, and the consumer is ready to spend.
Absolutely. There is only one thing I would like to clarify here. When Sunil talks about food and beverage, it's not the same as in hotels. He's not allowed to enter into quick service space. Quick service restaurants will be run by us. He can supply us the water and the coffee and the tea like we have in our hotel rooms. And it should stay at that. And one should remember collaboration is inside and competition is outside.
मैं आपको अंदर की बात बताता हूँ. I was just in a Taj hotel. वहाँ पे ITC की कॉफी थी. You should tell him.
पता नहीं कौन सा ताज होटल था. Was it Dalmia by Taj?
अब वो बाद में बताएंगे. Final question to both of you. RBI Governor said the following: his day starts with Economic Times, ends with ET Now. What about you?
My day does start with Economic Times. First thing in the morning, I make sure I have not missed out anything.
Does it end with ET Now? That is more important.
Depends. I mean, if I watch TV, when I end the day, it will probably be ET Now.
Thank you. Why is ET Now your favorite channel?
ET Now is the favorite channel because ET Now has always been on the side of Indian hotels, has always provided us a good platform, besides having very charming colleagues like Avan, Aisha, yourself, and you putting me always on the spot. For the audience, once we had a quarterly results thing and he said ki acha revenue record breaking, EBITDA record breaking, we journalists, we have the job of finding out what has not worked. तो अब सब कुछ तो रिकॉर्ड ब्रेकिंग है, तो छटवाल साहब आप बताइए अब क्या तोड़ने को बाकी है? You are live on TV, you don't know what to answer, right? So I enjoy those moments and thank you for being so natural and bringing the best out of us.
Thank you very much, Mr. D'Souza, Mr. Chatwal. You've been, just such good supporters of ET Now. On behalf of a lot of my, colleagues, a lot of my team members, thank you very much. This journey would have been certainly incomplete without support of Taj and without the chai of Tata Tea. Thank you very much, and thank you for finding time for joining us.
Thank you. Thank you.
Thank you, gentlemen. The rise of Indian brands with the rise with India that we are talking about as a tagline, these 15 years of ET Now, and we're certainly hoping for more growth in times to come.
Absolutely. And with that, ladies and gentlemen, the first ET Now Leadership Dialogue comes to a close. We would like to quickly thank our sponsors. It's presented by Capri Loans and co-presented by Jana Small Finance Bank.
And we trust you found this event to be an enriching experience. All of you who've taken the time out to be present here, the most influential figures of the business world, both industry and markets, fairly represented, financial industry, all of you. Thank you very much for your participation and our celebration of 15 years of ET Now, and we'll keep celebrating. We'll keep getting you the best programming ever on business news.
Absolutely. You know your destination for financial news. And with that, ladies and gentlemen, we're concluding this wonderful event, and you can all proceed outside for some dinner. Thank you all.
Thank you.